Welcome to Trade Live with IG. I am John.
Very good morning, sir. How are you?
I'm very good, thank you. Very good indeed.
The last time you were in this studio, my friend.
I heard we're having a bit of a renovation.
Bit of Phil and I next week are going to be polls.
Love that. You rewind back when we first launched this studio, like 10 years ago.
Yeah.
And the kind of the PR around our then CEO actually painting the walls for internal comms.
Really?
Yeah. Put some pressure on the top brass here, see if we can get the same thing.
Good luck. Right, so on today's show.
I'll be here through till 8:30, but I'm joined by Angeline at 8:15 for a little section of fast markets. We'll get the opening bell. Then Garth McKenzie's going to be joining us.
Yeah. We're going to be talking all things. P-Worth is in. US tech stocks melt up, he called it when we spoke this morning. It truly was today, apart from Nvidia. So Tech Focus is going to be...
Now you've got Axel with charting crypto back from his 3-week holiday.
Which is like he had a great time.
Oh, yeah.
Scuba.
Scuba diving, yeah. So he'll be back in probably to tell you some stories about that and tell us what's going on with crypto. Speaking of melt up, so we'll have to see what he says there. So tune in at 9:35 for that.
Right. How are we doing?
We're good. Feels like it's been a while since you and I have been on the air.
I think it...
It's been a couple of weeks.
Now, I will be in Scotland next week doing the show live from my dear mother's house in Bonnie, Perth. Yeah, I'm going to be doing the show in the morning and then going to the Fringe Festival in the afternoon.
Oh, excellent. Lovely.
So, yeah, very excited about that.
We made a stop. So we did a week in Aberdeen where my in-laws are. And I did a stop on the way up. So stayed in Edinburgh on the Friday night and then did a stop on the way back down again just to make sure that we could get 2 days for the Fringe. It's good fun.
And yeah, best show?
Well, we had the dog, so we actually didn't get to see anything. But we saw some friends. We were able to kind of walk around, get some drinks, and see the street performance.
Get
the vibes.
Wow.
I didn't know.
Realistic. For 12 years at Nike, running their European sales business, and now he does the same for Levi's. He is staying with me for a few days with his golden retriever.
Okay.
This thing's huge. I call him Aslan.
Yeah.
So we took him to the park last night, and he like literally pulls you along, and you just have to let him go. So the squirrels all over the place and everything.
Yeah, of course he was.
But yeah,
good boy.
Loving having the dog in the house.
It's the best. They are the best. But yeah, it means you can't go to any shows at the Fringe, which is a little annoying. It was up there. It was beautiful. It was like 25 degrees, 26 degrees. It was beautiful.
Couple of wee whiskies.
They've made Iron Brew beer now. So beer that tastes like Iron Brew. And it's an Aberdeen-based brewery whose name skips my mind at the moment. It's called like...
I can imagine it as cider.
Fireside brew or something.
I don't know if I can imagine it as beer.
Yeah, it's like a scrum, like a clear-ish, obviously orange brew. Anyway, it actually tastes pretty good. Coming from an Englishman.
Right. We'll see about that one next week. Right, who in the house? Shilling. Good morning to you. Yeah, I can't read anything because Angeline's all over it. Tuck, a very good morning to you and Boise. Neil is in the CPI numbers were fantastic. Honestly, let's go into overnight action and talk about Trump and Goldman's. So Jan Hatz is a German-born, he was born in Frankfurt, economist who works for Goldman Sachs. He's been living in the US for a long time. He studied in the US. And he is now front and center of the attack from Trump because he dared say that tariffs may be negative on inflation. And Trump had a crack at that he should maybe just stick to DJing. The head of Goldman Sachs. So now Trump sacks his head of Bureau Labor.
The Bureau.
Because he doesn't agree with the numbers being weak. He now has the fake news. And anybody who speaks against him, then he's having a go at. This is truly the Democratic Republic of America.
It's empiricism, isn't it?
Yeah.
It's the emperor's rule under. He's elected. He's got a mandate, which is the way he's going to view it. He's been elected. He has a mandate. He's driving the mandate through executive orders, and where it's not that democratic in the sense of. Well, it would kind of. It is though. That's the Americans voted him in for these types of policies.
But what's next? Do you think? What would be the where's the red line of what he could do if he started arresting journalists? Some of them.
Yeah, well, he's already said that he's going to put the army on the streets of DC, and he's done it in LA as well. Don't forget.
Yeah.
So he's starting to his martial powers.
What's the red line?
I suppose the red line is where does he get unstuck? Where does he do something that isn't allowed and he can't wriggle out of? That's the question.
Do you know what I saw at the weekend?
Because you're always going to be able to kind of, through the way that we speak to people now, through Twitter, through his Truth Social, you can get the undiluted version of what they want to say from them.
Yeah.
And everyone's going to get a notification at exactly the same time. The power of public communications is now very controlled, the most influential people. Is that not the same as where we were 10, 15 years ago, but through the newspapers? And so everyone was kind of back channeling things through newspapers where they had a political tie to. We've just kind of, we're just speed running that. So we're noticing things a lot quicker than we were 10, 15, 20 years ago.
Do you think he writes it and presses send?
Usually has someone that he scribes it to somebody. Someone else does it.
There's too many mistakes in it.
This is the thing, right? So he has someone that follows him around the whole time to kind of just bleat this stuff out. So I've read. The truther. But they have to, he says, pauses, the stops. Right? Can you imagine, can you try and interpret when that's a comma or when that's a full stop? It's a all caps rage. I don't know.
Right. What are the odds of Donald Trump being impeached before the end of his reign?
Again?
There is actually a market on this. You can bet on this.
Is there a Polymarket?
Stop looking up Polymarket. No, this isn't. No. This is what we can bet on right here in the UK. This is on Betfair.
Okay.
What is the percent? Let's put it into percentage. The percentage chance of Donald Trump being impeached before the end of his reign.
I'm going to give it.
Let's do a poll.
Okay. I'll give you my thoughts after we see the poll. So what do you want to do?
Okay.
25, 50, 75?
That's when it's 20%, 20%, 35%, 45%.
And then time will tell. You were gonna while we're waiting for that to come.
So did producer Phil get that? Was he listening?
Yeah.
Excellent.
Want to look at boring
two-tier Kier is saying 0. 0.
You wanted to talk about CPI and inflation.
Now this isn't what you think chances are. This is what the official odds are on Betfair. And if you think it's 0, you can make it, my friends. Back it. Put your money where your mouth is.
Go short. Those odds. Yeah. Okay. CPI.
Yes.
CPI came out, of course, in line yesterday. Pretty much in line. The month-on-month figure was a slight increase, but a little bit more than the market was looking for. But the core figure is what was the concern. This table might brains out, but let's take a little look at this. So this is when I was asked last, we were looking at the UK CPI. And the UK CPI website, they give you, it's a bit more graphical. You can kind of see what the inputs are. It's a little bit easier. This is the year-on-year change figures and the month-on-month change figures of what it is. So so it hasn't changed that much. But these year-on-year is where it gets quite exciting and interesting. So we know that people are paying more for things. It just feels reduction in the energy costs, kind of 9% points reduction in the likes of fuel oil, motor oil, utility. Gas is up 13.8% year on year.
Wow.
Electricity is up 5.5% year on year. Energy 7.2%. So whilst the raw costs is coming off, the actual cost of what we pay for our utilities is absolutely flying. Sorry, what the US pay.
But so that's obviously all in the core. And that's why the core was high. So what was in the absolute inflation?
Food and energy, I believe. So we strip out food and energy, things like shelter, things like care. Things on year.
Property.
They call it shelter.
Shelter.
Yeah, which is
coming
enough.
down.
The problem. So your industry, i.e., people that are paying their bills, are seeing these price increases, but because you've got headline figure doesn't change necessarily, and that's this kind of dichotomy we're having at the moment between Wall Street and Main Street.
Stays reign, right? End of the dictator's reign, not the end of the year. So 2020.
Shelter. Lost train of thought.
Lost train of thought.
The point I was making is for people on the street, the things that are being heavily tariffed, because this is where are the tariffs come into play?
The $1 trillion from tariffs.
Correct.
That was verified by Trump in his Truth Social post last night. $1 trillion. Look,
I mean,
the American companies.
Of course, but where is it coming through in the figures?
CPI comes in on the screws and non-farm payrolls may be canceled. It's Tuesday, August 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, taking you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. What a day it was for U.S. equity markets. S&P 500 clocking a move up to a new all-time high, right around 6470. The NASDAQ breaks through 23,900 here. CPI comes in right on the nose, 0.2% month over month for the headline and 0.3% for the core. While there's evidence of tariff-induced inflation, it's not running away, and quite frankly, weakness in other areas is paving a path for a September cut, possibly. Well, that's if you ignore the Fed speakers this afternoon who said that they're still not convinced a September cut is possible. I digress, though. Looks like we're back in reflation territory, gentlemen. Economy's still holding up. We're going to get rate cuts. Bonds break down today. We have dollar getting hit hard, as was pretty similar actually to what happened in September last year after the Fed cut. Dollar doesn't really begin its climb until October. I digress though, Dylan. You deserve the floor. We've been talking and thinking far too much around here, my friend, and you have not.
I mean, I almost feel like I hesitate to speak because words tend to become correlated with thought. And if I speak too much, I'll get accused of thinking.
Should we sit here in silence for the next 55 minutes?
Quietly sit here without any thoughts in our head and just enjoy all the money we're making. No, I mean, listen. The problem with thinking, as we've discussed at great length, is that it leads to rational analysis of a potentially weakening economy, a potentially slowing economy, all these potential liabilities that ultimately are overwhelmed by by basically trader investor sentiment. And I think you said it kind of perfectly there just a few seconds ago. The combination of sort of the overwhelming optimism on the artificial intelligence side, combined with the optimism for the rate cuts, put us in a tough place to be short as a worldview. Even though again, as I've said, I feel like I could make a great case for being short, but I feel like that's why I kind of make my joke about thinking, because once you're short, you're kind of nowhere, because you're up against this sentiment issue, which is the real problem that we have right now.
It's a sentiment issue, but everyone's already long, right? I mean, we discussed this earlier today, and let me explain, but UBS just put out their new report. CTA exposure to US equities is in the 100th percentile now. Never been more long. Everyone's fully invested, and yet it doesn't stop the market going up today. I can't help but see that we have thus far maintained the rally that's been in place, the channel, Dylan, that we were watching last week and the week before. It carried us here since the US-China trade war detente over in Geneva, Switzerland back in mid-May. Mm-hmm. I'm just looking at this. This is just very simplistic. We have a range. What's the size of the range? If we break out, add it to the top. If you break down, subtract it from the bottom. We could hit 6,700.
According to the Times, has emerged as a leading contender to take over.
Now, they do already have other holdings in the European water, Hawaiian, and UK power networks. Infrastructures. So, there is precedent there.
There's political
pressure that.
Well, if they already own UK assets, these guys clearly aren't under the same immediate pressure, because they would have been forced to do something already as part of.
For some of our viewers, but I don't think Northumbrian water is as much of an infrastructure risk as Thames Water is.
Potentially not, but UK Power Networks, which I believe own. I think they own. I think they own them. Kind of.
It's not the national grid.
No. But I think they. Or complain about anything.
But of course,
no.
All you got to do is pay 15% of your sales, few billion,
and you get done.
It's all good.
Yeah, 15%.
Yeah.
It's
so
VAT.
Maybe the government.
VAT. That's what it is.
If the government 15% of the profits from Thames Water, which are zero, we're okay.
Well, hang on. Can you use the loss as a tax write-off to help us with the deficit? Is this some big brain thing? Reeves is sitting there going, right, how can I write something off?
Well, this is one of the problems, actually, and Poppy can help us. Has had experience in this. For the UK institutions that hold water debt, the question is, are you going to wipe them out and then sell it from the government? So what are they planning to do?
So what? Just
Railtrack was going to default on all its debt and give everybody zero. Through his company.
Mm-hmm.
And I think it was some, and went to the government and said, as UK government debt.
Yeah.
And you are now, so if you want us to buy gilts in the future,
Did they go ahead with it?
So they got paid out.
Interesting. We'll see how that unwraps then. That will be interesting to see how that unwraps.
Yeah. Very difficult to upset institutions you then want to buy gilt. That is very much, that point is made.
You've quite rightly corrected us or given us a bit more information. So UK Power Networks own the regional electricity supply system in at least 1/8 of the UK. Good.
Confirms in here what would happen.
While you're looking at that, do you want me to run through some of the
yes, please do.
stocks that we've run through this morning? So this morning we've had updates from Balfour Beatty and Beasley and Persimmon. So we'll start with Persimmon there, the home builder. So their pre-tax profit came in at 146 million, beating their estimates. They've maintained that their full-year homes completed. They've maintained their full-year guidance on the homes that they've completed. They remain growth in the outlets. I'm just going to pull up a pre-market call on these ones. So our friend at Singers are calling Persimmon up to be 1%. Balfour Beatty, they are being called down 2%. Their pre-tax profit of 95 million beat on estimates, and they've expectations to finish this year. However, and they are remaining positive on their longer term outlook. So they are called down 2, which was where I made the mistake. Profit before tax 502 million, beats estimate. However, they've reduced their growth guidance to low to mid single digits, reflecting current market conditions. So watch out for those guys. London Stock Exchange sponsor our opening bell. They've been tipped as a buy in the Telegraph, saying the stock market is not efficient. This company proves that it's not efficient and is a buy. I haven't put a price target on it yet, but you can see. So that's interesting.
Right, I did find, if we just throw up that quickly. So the quote is in the Financial Times, it would look like the government is siding with one institution with close links to the Chinese state at the expense of blue chip UK financial institutions, they said. So that is the warrant. And as Poppy's saying on chat there, he managed to get the Chancellor to change the rail track terms, which is just fantastic. So, right.
That's excellent.
What other moves do we have this morning? Evoke up 2%.
Evoke up 2. We've got their Q3 revenue is in line and the momentum is accelerating into the second half of the year, and they remain on track to deliver their full year guidance. So solid.
Excellent.
Solid. What else have we? We've got TLS, a huge name.
So convinced that this is complete and utter just terrible business. Yeah.
But that's just a company that to have its business eaten by websites. What you go to Shoe Zone for? Is it school shoes?
To buy Crocs,
Is it like trainers? Is it? Wow. I wouldn't know what you'd be buying in Shoe Zone. In fact, I'm going to Google it.
So, producer Phil saying, yeah, it's shoes, mate. Right, when Luke is having a look at that, let's go to your chart of the day. What are we going to have today, sir? So, it's a Democratic Republic of the United States.
Go
Stock.
for it. I'm just looking here. It is school shoes, and I've already been offered £5 off if I buy my shoes on their website. Great.
Desperate. And they're only £10. Yeah. Right, 3, 2, 1. Hamish, go and make a cup of tea.
Could be legal in general, fresh on the page, then in grins like he's rang the bell. Only time will tell. Call it right, play, take your shot, and guess the chart. Markets twisted, trends that fight. Guess the chart. Get it wrong, alright. It's not financial advice, my friends. It's a game never ends. From London lights to the trading floor. Guess the chart and come back for more. Bill points it out, crowd leans in. One bold call, who's gonna win? Cornelius it.
That song is, it reminds me like I'm playing Grand Theft Auto, like just cruising along, listening to one of their radio shows. I need to get the actual MP3 of that. And
Cruising like Pacific
Yeah.
Coast Highway,
Yeah.
listening to that kind of thing. Boise, am I still expecting an S&P dip even rate cuts now expected? You've answered the question yourself, my friend. If it's already expected, then yes.
correct.
So
Rectamundo.
yeah, Hamish was busy. That's funny because they cut me off early, Hamish, and I said, Hamish, go and make a cup of tea. People a chance this morning.
He was making tea, there you go.
Yeah.
Boeing hasn't gone anywhere in 2 years. That was what I was trying to look for. Where has it not moved in 2 years? Right, I'm going to look at shoes.
It's on a delay.
Shoe.
It's at deposit.
Right, do you know what? I'm surprised it's not better bid than that, considering they're being paraded around as part of these trade deals. Everyone's going to order billions and billions of dollars worth of planes. I'm surprised it's not moved more.
The planes crash, don't they?
Yeah, they're true. They do. Bits fall off.
That's why.
Shoe Zone indicating down 41%
It's painful.
in the auction. Watch out. Back to school for them. There you go. No.
Getting schooled.
Getting
right.
schooled. Okay, keep an eye on those.
Bell in your hand, sir. Or shall I ring it
will. You can have a little look.
today?
Persimmon's indicating flat. Beasley is.
That's better.
There you go. Auction in Beasley not open, indicating down 5.7% off the back of those news, of that news rather. So keep an eye out for those. I will watch to see where they are.
BHP up 1% as well. AstraZeneca 75 basis points. Yeah, all of them much. Are there any big fallers in the big stocks? Persimmon down 2%.
Persimmon down 2. Canal Plus in your FTSE list, is it? Yes. I suppose
Well,
it is.
this is more stocks of interest,
Yeah. Okay.
including Iron Brew beer.
Yeah, there you go. Beasley still not open, so we're going to give those a couple minutes there. What is going on at the top of the pops? Fresnillo, BHP, something in the mining space there. I know that the lithium kind of mining trend has been big this week. A lot of those plays have been moving.
Let me check iron ore really quickly. Iron ore was unchanged overnight, so nothing big there.
And gold and silver are, silver's up 1.2%, gold's up 0.3%. So Fresnillo, one of the biggest silver miners that we've got in the UK, so potentially getting some bid there. Ocado 1.4%. Now that probably would be a story. That's a UK tech play, really, isn't it? Platform play.
Yeah, nothing major. Let's see if there's anything in Europe that's a bit more exciting on this beautiful morning. Did everybody manage to sleep last night? I woke up about 4:30 with, I mean, unfortunately, my bedroom's the part of the house that the sun heats the most. So the living room's nice and cool and the bedroom's boiling.
You got to get yourself an air conditioning machine. I did
I've
it.
got one that's just very noisy.
It is loud, but it's kind of like people sleep with white noise. So I'm kind of trying to train myself to sleep
Right.
with it going off. I mean, when the room becomes a nice 17 degrees, I'll go.
Yeah.
Anyway, best couple
I
of
might
nights.
try
sleep
that
like
this evening.
It is definitely worthwhile your investment, not a sponsored link.
Right, European autos, I am having a serious thought on whether to just short these, close my eyes and be short them until they are another round of profit warnings. But it's tricky. Rheinmetall up 2%. Rheinmetall slowly gathering back. It's 20% off its highs. It's in a bear market, Luke Moore.
Yeah. Well,
What's
I
German
suppose
for bear market? Let's check.
you can check. Look, I think that might be moving off the fact that this Friday's supposed meeting between Trump and Putin is already having the expectations kind of walked back. According to the Financial Times this morning, it's going to be a listening event to kind of hear what each other want, not a policy-making event, because of course Zelensky's not invited. But that may well be
It's just an excuse to keep Zelensky quiet for a few days.
out of it. But maybe that's the reason why it's kind of picking up a little bit. I mean, it's volatile, down 1.8, 1.5. That thing can move around. Luxury's Keyring's up there. Hermes is up a little bit.
Oh, ready?
Go on.
Besa.
A base
Beza. Is that bear market or just bear?
bear market.
A Beza.
Yeah. Well, it's typical, isn't it? Germans so efficient, they have a word for
Everything.
a bear market.
Yeah.
And then a bull market is a hausa.
A bear market is a house. A bull market
And a
is
besa.
a Beza.
Yeah. There we go. Jugger, tell us we're wrong.
Keep an eye on that. I was actually just looking at Cardo. Bring Cardo up while we were waiting.
Yes.
What a move this has had in the last couple of weeks. It's gone from £2.30 up to £3.56. Where's that gone? It's actually gone to flat. So you might have to want to run a quick search for it.
I think it was just a bit of a wide
Running
spread
research,
this
yeah.
morning.
Yeah, potentially. But that has had one hell of a move off of its lows at 233. And that's probably gone under the radar, I think.
Oh wow, completely. You're right.
Completely under the radar.
In 2 weeks,
Yeah.
3 weeks.
That's a huge move. That's moved, what, 40% in 3 weeks?
Did it have numbers?
Upbeat on their Krog relationship on 17th of July. When did that move? That moved on the 17th of July. Yeah. So they've reiterated on the 17th of July. their
Half-year results.
partnership.
Half-year results, 17th of July.
Yeah. They're expecting to sign new partners with as exclusivity terms end, say the CEO, on their relationship with the US grocery partner Kroger. Okay, so that's just been a story that's had, well, 2 to 3 weeks worth of move there. Fair play. Good for them.
All right.
Let's keep an eye on Beasley as we're getting up to that 5-minute window now, indicating down 6.5. And while we're waiting for that, I've just had a text from my wife. Fierce Brewery is the name of the Aberdeen-based brewery that makes.
Nice.
There you go. Let me see if I can get you a nice picture for it. Fierce.
I'd be fierce after having 5 of those, I think.
Fierce.
Beasley is open.
Beasley's open down 6.3%. It's actually nice. It means that my wife is watching the show today. Good morning, honey.
Good morning, Mrs. Moore.
Here we go. Fierce Brewery. You can have a little look at that whilst we are waiting for Beasley's to continue to go down. There you go. Get yourself a can of that. Iron Brew
That
beer.
looks really healthy.
I don't think it is.
Do Iron Brew get any money for it? Considering we look at AJ Bar.
I don't know. I've no idea. Iron Brew. They call it a beer cooler. They're not quite a fully fledged beer.
They spell it wrong. Somebody else did this, like, Aldi or something, spell Iron Brew like that, so they don't have to give any money to.
Yeah, but that can is
Bell.
pretty close, right?
Yes.
That's a bit of a rip-off.
Graceful. Looking at £8. Well, it's trading 8.49. Bit of a.
Yeah, so let's just go through those numbers again. So they beat on their profit before tax, 502 million, beat on their estimates, but they've reduced their growth guidance to low to mid single digits, reflecting current market conditions. And the market clearly hates it.
Back to where it was on, well, not quite the April lows, but where it traded around in that April. It'd be an interesting one for Axel, that actually, because it was resistance, support, but is it support? That's the question.
It'd be interesting to see that because, of course, Beasley are an insurance business, a specialist insurance business. So why would they reduce growth on a forward-looking basis for in the insurance market? I suppose insurance.
Sorry, I'm on the completely wrong company. I thought this was a home builder.
You're thinking of I don't know who you're thinking of. I did Google it because I also wasn't sure exactly what they did. But they're a specialist insurance business with operations in Europe, the US, Canada, and Latin America and Asia.
God, I've never traded this.
Are proud participants in the Lloyd's of London market. So they're specialist insurance.
God, they're trading like Legal and General and everybody as well. Then look at that. And Aviva. So very similar to Aviva graph.
Wow. Do they use them though? Because that's what a lot of people buy these insurance companies for. Let me have a look at dividend yield. Dividend yield is only 2.7%. So no, not really. Not particularly.
Let's have a nice look at those commodities. Oil. Oof. Where do you think this base is outlook?
Wow. Here. It's been around this level for a while now, isn't it?
No, it's 66, 67 a couple of weeks ago.
Yeah, but I think anywhere in this kind of mid 60s.
So
it's not breaking lower, and it's definitely it hasn't been breaking higher. And we had production recently, or a commitment to not
increases.
Okay, a commitment to increase, and we saw it a little bit. But look at it; it's been, I'd argue, that's kind of flat as a pancake, trading around the mean for the last since March.
So, of course, on the show 2 weeks ago, the number one commodities research guy in the UK told us Russian oil coming back into play, if there is an agreement on Friday, will not affect the oil price. Concern, it could affect the gas price, but it will not affect the oil price, because let's face it, everybody's buying it anyway. They're just shipping it a different route.
They're just changing different labels, aren't they?
So, if there is some weakness there, remember, we're in a strong economy. Mm-hmm. We're in a Trump economy. Mm-hmm. This, on the podcast, you heard Goldman Sachs and Spice told us that you could see up to 4% GDP, right? Mm-hmm. $62 does not equate 4% GDP growth.
Yeah, but neither does 76. 76 feels restrictive almost. So it's trading in a range. For me, there's not a huge amount of interest in it as a space. What's more interesting is that, does stay in play? Does we? It's not going away, is it? It's definitely not going to go away.
Bees are homes. That's it, maturing. Thank you very much. Bees are in bees.
There you go. Okay.
Good stuff. Right, time for Angeline to come and do fast markets. Mr. Moore, I'm going for coffee with Pete Ward quickly before Garth McKenzie joins me to talk markets.
Lovely. Better be quick. 20 minutes. Off your pop.
Like and subscribe. Like and subscribe.
Like and subscribe.
For Luke Moore to get a new shirt.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it was about power. It was about the mind. Become the bull. visualize greatness. Minds are ready? Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, yeah.
We're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind a stock market, and it's days like this, get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would, because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historic. And it's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Hey, Trader Friends, welcome back to Fast Markets with myself, Luke. Wow, we've got the poll out.
Polls out.
Let's
Polls
get it
out.
up.
We've switched seats. We've moved on to the other side of the studio.
Like Clark Kent, superwoman here. It's us. We get things straight to like just this poll result here. Let's read it out for our Trader Friends.
Let's have a look. So we were talking on the part of the show. What are the chances of Trump being impeached by the end of his term, not by the end of the year? And we've got 0% is 60. So the 0% chances are 68%. 2/3 of you think that he's not going to be
I'm
impeached.
just going to put my hand up. I was one of the 0%.
Okay. 15% of 13% of you say there's a 15% chance. Only 10 give a 45% chance. And weirdly, we've got 25% there at the bottom, 7. So it looks like you don't think it's going to happen.
Yeah, I mean, it's just going to take too long. I mean, and the thing is, even if he does get, even then the impacts will be very quick. But I don't think he's going to get impeached, at least this year.
No.
Right.
We'll have a
Good
look.
morning, Trader Friends. Good morning, Jugga, Marco Polo, Maturin. I think you're right. I think Rich was thinking about bees. How many of you out there? I know Luke was enjoying it when we had Guess the Chart drive-by song.
I love that song so much.
Oh,
I'm proposing you do your damage. Put it in your playlists.
Speaking of which, straight away, the
There are.
perplexity.
The perplexity story was
Why?
indeed
It's a
interesting.
journal that broke it
The
first.
Wall Street Journal. Yeah, the Wall Street Journal. Now, you've told me that you've got a
my-
nice little infographic. And
Yes.
Stephen, I've seen your comment on Circle. I think it's worth talking about that as well. So let's do the Google story.
Yeah.
And then we'll talk about Circle in just a second. There'll be our fast markets for you today.
Let's whack it up. Well, there we are. So this is the big news out there. Chrome is not actually up for sale.
But there is stories to it. So the news that broke last night search engine to gather data. They're doing a lot of space. They raised money recently at an $18 billion valuation. Now, the interesting thing here is who is backing them. They are backed by Bezos. They are backed by SoftBank. They are backed by lots of very done app. They've also recently launched a browser themselves. Now, their whole purpose of this, and when we've spoken about the AI story in the past, it's all about distributing AI, right? How can you get the mum and pop user to interact with it so that they can sell you advertising? You know, the ChatGPT is probably one of the most popular app in the world. You know, Grok's, what we're seeing is Anthropic releasing a model. Then all these places are introducing.
It's getting crowded.
It's getting crowded, but the winner is going to be who can distribute it and get more users. So what this is this is a moonshot. So they have bid $6 billion, and you're right, that's $36 billion for Google's Chrome business. Now, why is this a big? It's a lot of money. They're punching above their weight. It's a moonshot, as you mentioned.
34.5 billion.
Sorry, 34.5 billion, right? Let's get the numbers right. But why are they doing it now? A DOJ, Department of Justice antitrust ruling, saying that they have a monopoly or close to a monopoly on search. So what do they do about it? The DOJ last year, and I'll just get it up on my screen here, suggested search. They've got a monopoly, and that was a last year. They proposed that you could divest Chrome. So if you sell off Chrome, that would work. And in the letter that perplexed Chrome, it was like, yeah, this is a ballsy shot. Take it or leave it. But we know you might have a problem around the corner. We're a willing buyer.
Yeah.
Come to us.
I think it's going to go up because, you know, Chrome, as I mentioned earlier, is not actually for sale. So they're saying we are going to
take it off you.
Suit up, and we're going to also fight, you know, forces sale. This huge regulatory uncertainty. Plus, that financing gap is huge, right? It's absolutely huge, but it's very clever. I have to say, Trader Friends is very, very clever because, you know, like you said, there's a huge user base that Chrome could give Perplexity. More than 3 billion users. Makes sense. I'm going to put makes sense because it'd be wonderful have this at the moment. We all have these apps, right? Let's face it, right? This would be absolutely embedded in, and also we are coming to a time where we're going to see AI just being offered everywhere. So
have a browser these users.
They not only need users, Luke, but they need a lot of data that it can its own software.
A training thing because they've got, I mean, Perplexity ultimately gives you the ability to search on top of different models anyway. So all these models they've farmed out, they've got access to GPT's models, and Grok, etc. I think this is a bet for actually making money. Okay, what is Chrome to Google? Chrome. Okay, what can Chrome do? It can cookies. It can then build out better models of you and your profile to then sell your profile to advertisers. Okay, so Chrome is a gateway.
Cars and helicopters.
I was like,
sure, if you're listening, you know this is true.
Okay.
Cars and helicopters. Not that I can afford either, but
yeah. So it's the gateway. Okay, and so if Google's golden goose is advertising, which we know it makes the majority of its cash from, Chrome helps feed the profiles to sell into that advertising business. So if you cut that out, worth for Google. Well, Google rallied yesterday. It wasn't rallying on the news, but it was having a choppy uptrend all afternoon. And I would say it didn't necessarily move as a result of the bid. 30 billion, whatever the number is fairly small relative to the value of Google, which is trading around 2.4 trillion. So I wouldn't expect it
But it is bold. What it is also very good at is if they fail, it's a fairly decent marketing punt because they're all over the front pages today.
Yeah. Win-win, right?
All over the all over the pages. But as Boise says, it's not just the browser; it's also the Chromebook operating system. That's one. Interesting to note, though, one of the things that was defined in the deal is Chrome itself is a private entity within Google. However, the code base is called open source, and open source fed things like Opera. I think it's even fed things like Firefox as the coding base, and that is open source. So Google open source, and they built it and they developed it and everything that comes with it. But it's going to be interesting to see kind of where it really settles. If we get a ruling over the next month or so to say that Google has to divest Chrome because it's got this monopoly, Perplexity are going to be there. They're opportune buyers. So that's going to be one that's interesting to see. I mean, I've got them as a Chrome add-on, as a bolt-on. So I just click a little button. So for me, it doesn't change how I would use Perplexity, how I would use Chrome.
I'm a Chrome user too, as you know.
Everybody is.
Yeah. So Boise saying Chromebook laptops massive in schools. That's right. I've got a couple at home. Into Google Young, yeah, it's all about, you know, it's like your bank, isn't it? When you get them at university with a free mug, you're suckered in for life. I still have that Barclays mug somewhere. Boise saying Chrome is not just a browser, it's also the Chromebook, as you heard Luke rightly saying. So Google will not sell it. This is going to be a tough battle. This is what I'm saying. Google is not going to let go.
Well, they don't need. They don't need to sell it. So why would they?
Yeah.
If they're forced into, then you know, I suppose who are the back? You know, Amazon have got a huge advertising business. So we know that Bezos is a backer. Nvidia are also a backer, and SoftBank. Look at the you've got to look at the reasons for why they would do this.
Yeah.
And I think Bezos through Amazon, could this just be Amazon's backdoor to try and swipe at one of their competitors?
You want to look at one other before we went on to the timeline of Russia-Ukraine calls today. You mentioned one other stock.
Yes. As per Stephen's request. So Circle, they had the numbers yesterday. Let me just on my screen here. Dilute you down that much, 10 million shares. So 10 million. What's the price of the stock at the moment? Have you got?
Definitely see a reaction to that. It was down 6. This is 153.29 is the current level.
Okay, zoom out a little bit.
Here we are.
Yeah. So it's above its IPO price. Is the more important thing.
Yeah.
And if you could click on the fundamentals up there for me.
Here we are. Fundamentals. There we go. It's coming.
They've got the PE here as 235 on a normalized basis. And so let me just run that through. Circle Internet PE.
Let's take a look at tip ranks whilst Luke is looking at that to see whether we have a view. And we do analyst consensus 5 buy, 4 sell out of 15 ratings. And on the client sentiment side of things, don't forget, trader friends, this is a view of sentiment in the IG client universe, and it is 92% long, whilst 8% have short positions.
Yeah, Yahoo Finance have the PE of over 2,000.
Yeah.
I mean, you're looking at companies like this, you're looking at companies like Palantir, and if I was a Richard McDonald and I was bearish, these would be the kinds of company that you'd be wanting to
reduce exposure to, or when things start to turn, what do you give them a kick? You'd be wanting to kick these ones that just trade on a ludicrous valuation. It's yeah, I don't know.
And I'm a MacBook user, ChatGPT integrated through my Apple ID. I too am a MacBook user. I'm a Mac family actually, but by default I have to use other operating systems too, because you just have to, don't you? If we bought Mac with work,
everything that works, all Microsoft.
yes, everything that works on Microsoft.
And everything up there, yeah. But I think it is the winners are going to be the ones that can distribute their tech, because what will eventually happen is they need to make money, right? Make money is one of these language businesses. If you have to first run your own app, so you have people searching into your LLM to be able to generate results. You can also sell the LLM to enterprises. So like we've got a deal, we use Claude, so we use Anthropic's models. So we do a lot of our work and using that, and we obviously IG have paid for that. But to the mere kind of person on the street, which they are often having at the moment, you know, I think you can pay Perplexity 20 quid a month or 200 quid a month, depending on what access you want, or you can use it for free. They need to find a way to generate revenue. So if you know if I know what you're searching for on your GPT or on your
Cars
Perplexity,
and helicopters.
cars and helicopters, can I now suggest things to you that drive direction? Because what Perplexity do quite well is they ask follow-up. So, you know, I asked yesterday, because I didn't off the top of my head know what they were recently valued at. What were you recently valued at? And it came through, and then it had different questions. Now, could they get quite clever with those suggestions being, you know, you're talking about this. Did you mean you wanted to talk about this? I don't know how they would do it. You'd want to do it, you know, subtly. But to me, that's the interesting part there. Is
What's also interesting is we are not yet stage. Friends, if you know, please tell us whether it's to do with regulation or whether it's something more subtle, like we just haven't got there, the tech here hasn't got there yet. But over in Asia, if you watch, for example, a video of someone, I don't know, I'm just making this up, dancing with the brand new Nike shoes, but if you're on WeChat at the same time, it knows watching this on WeChat, or your friend, your mate has sent it to you. It would immediately on the side, if you zoomed in on something on that video, it would immediately have a pop-up telling you exactly where to buy those shoes.
Yeah, but you get that now. You get that on YouTube Shorts, which is a Google company.
You do.
You get that when you're scrolling through Instagram stories.
Except YouTube.
True. Is that the play? Because you can then advertise directly in as a click here to purchase. That's an interesting
Here
angle.
to purchase, that's right.
If it is Bezos behind the bid, they've just said that they've secured the funding. That's what they've said. Which actually reminded me, do you remember when Musk said that about Twitter? So he said, I'll take Twitter private at 420.
Yes.
Funding secured. As it might throw back to that.
Well, didn't he get like into hot sippy bubble, and there's a lot of investigations.
Oh, he got into loads of trouble about it.
Yeah.
Loads of trouble. And then they obviously forced him into it, and eventually. But there's, I mean, look, you never know who's behind what in the kind of AI world, because Elon and Sam Altman hate each other. There's lots of is this just another pawn, because Perplexity is seemingly one of the only independents to come out that are not tied to one of the majors. Of course, Anthropic were financed heavily by Google in the early days as part of that alphabet structure. Perplexity, yeah, they're kind of just a startup, but have obviously raised a lot of money from a lot of major players.
Speaking of which, a key timeline to talk about, which is coming up today, Trader Friends today. Those of you, I know you already talked about Rheinmetall Defense and how they moved. Monday they dropped, but now they seem to be recovering a bit ahead of the Alaska meeting on Friday. My chart, Trader Friends, I've made a handy timeline for you. This is according to the Germans, to the Germans at 12 GMT. Read it out for us.
Oh, blimey, you might need to zoom in a little bit more.
Oh, yes.
And I've got my glass a little bit one-sided there.
This is for today, Trader
Okay, 12 o'clock
Friends.
today.
Yeah.
This is a meeting that starts between European leaders and a Ukrainian summit. And that's in Alaska, is it?
No,
or is this
this one
a precursor?
is ahead. video conference call ahead of that summit on Friday. Zelensky there, we'll have the Germans,
Okay.
the Finns, the French, I assume Starmer, Italy, and a load of other people from NATO.
Not the US.
No,
Okay.
because that happens a bit later today.
Okay. Scroll.
We'll read us through 1300 GMT.
Yeah, here we go. Okay, so at the same time, or an hour later, there's expected to be a call between Trump and JD Vance. This is another listening exercise. So this is interesting. This is today's listening exercise to allow Trump to hear the European position before he has a listening exercise with Putin on Friday. Okay, so they're expected to talk about information on peace terms, European European concerns about territory swapping and NATO's role in the post-conflict security. Okay.
And Zelensky has already warned that any unfair deal without him in the talk is not going to hold. And interestingly enough, after that, there is one more call, which I think is the most call of the morning. Coalition of the willing meeting, and they'll talk about how is this actually going to work, guys?
Contingency plans.
How? Yeah. Here are the plans. Here's contingency plan. Plan 2 happens, and right after that, Friday meeting. So this is a bit like the setup.
Zoom out on this one just so we can see what the text says.
Yeah. So the setup.
There you go. Okay, fine. So yeah, now we go. So basically today between 12 and 3 o'clock, we might see some headlines. Is that what we're saying? Yeah, there might be some headline risk.
Exactly. So if you're trading this, people, trader friends out there, do make sure that you are aware that these hours might give you some opportunities if anything concrete comes out.
That must mean JD Vance is Cotswolds, right? He's being paraded around Cotswolds, it looks like.
Yes.
Interestingly, he met, did you see the picture of him with Tom Skinner?
Yeah.
Unbelievable.
So
So Tom
random.
Skinner, the ex, The Apprentice, and a bit of a social media enterprise. A lot of the bosh stuff.
Yeah.
Apparently they've struck up a friendship on social media, him and JD Vance. Picture after a beer in a pub in the Cotswolds.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, everybody. It is our good friend Garth Mackenzie from Traders Corner. Garth, welcome back in the show.
Hello, Rich. Thank you very much. Good to be back. How are you doing?
We've certainly got plenty to talk about, sir.
We sure do. There's lots happening. Markets strong, aren't they? Just feels like the pain trade is up, up, up and away.
And it has been for some time now, right?
Well, it has been, absolutely. And this is the thing, right? Markets always climb a wall of worry. And after that massive sell-off in April, looked like the market would bounce and maybe chop around a bit. It just hasn't happened. It's gone straight back up in a V-shape to new all-time highs and continues to make new all-time highs. And I think the shorts are very much wrong-footed in this market, feeling the pain. And in a sense, that's perhaps also what's actually driving, because it just doesn't feel like it's going to let up. Having said that, we are in what is seasonally a bump time of the year between August and September usually, but those seasonal patterns, it's not a roadmap, it's just history.
Thank you. You are the first person I've actually heard say that. Michael Batnick, that does the podcast with Josh Brown, goes back to historical previous moves and seasonality every time. And I keep thinking it's almost like, okay, I leave my house every morning and I'm crossing the road and I know that the traffic lights changes at a certain time every other day that I've done it. Therefore, I just close my eyes and walk across the road. It doesn't matter what happened historically. Seasonality, it doesn't matter. Because you've got a new thing every single morning that hits the headlines, right? Yeah. It's something that people can trade off. Algorithms are trained on. Doesn't necessarily mean that it has any relevance at all.
No, look, I think that the seasonality patterns, I think, do have some relevance in that. There's a reason why the August-September period is historically a little normal. Summer markets are often a little bit quieter. Traders go away, take a bit of a break. That might have something to do with it. But again, it doesn't necessarily mean that it's a roadmap. Just because in the last 20, 40 years, whatever, the markets have been weaker time on average. And remember, that's on average. It doesn't mean to say that it's every year that it's weak. Some years it's not. So it's something I kind of just keep it in the back of my mind and keep aware of it. But I don't think you can just rely on it.
But I guess what you're alluding to is that the decision makers, right? We know all the hedge fund managers take their kids off school, go down to the south of France, go to the Italian Riviera. But they're not the ones that matter anymore. Algorithms don't go to the beach. CTAs don't go to the beach. Things have changed, and they're up to the eyeballs. They haven't de-risked at all. It's full risk on in algorithm world.
It feels that way. It certainly feels that way. And I think your point about algorithms not taking a break is actually very well made. And I do tend to wonder sometimes historical patterns that we've come to not necessarily as relevant anymore as what they might have been in the past. Certainly this August, and we're only halfway through, but this August is showing us that be very careful to rely on that seasonal weakness, because it's just not happening. It just feels like, this market is I hate to say, but it almost feels like it wants to melt up, and maybe feels like every dip is bought and it remains very, very robust. And very strong.
Yeah, no, talking about, I'm one of them, right? I'm one of the ones that's short. Every day I'm having, yesterday I had to buy a call spread on the day 0 days to expiry because I had to cover my thing, say £3,000 every 1% we go higher in the S&P. So I try to cover that and maybe 1,000 of it back on 0 DTE, make 5 back on every time the inflation number comes in line. The market blindly reads it as positive, so it goes up, 50 points.
Yeah.
So, you can try and fight it, but continue fighting and defending my short position, make money. Right? Now I'm starting to, yesterday I bought some Alphabet. Because they're such an underperformer. I'm long Lloyd's. I'm long these underperformers. ASML. They're short of the S&P 500. I bought yesterday, and I should have bought, and I looked at it, and I'm kicking myself. I didn't. Was the Russell 2000.
Well, that's it. That Russell 2000 move yesterday was really interesting. So it was up basically 3% at the end of the session. Pretty much double the performance on the day of the S&P 500 and the NASDAQ. And that really comes down to interest rate expectations from where I'm sitting. Figures came out in line with what the market was expecting. So I guess people at the Labour Department leave. Maybe no one's going to get fired this week for sending out that information. Not that it was nothing unexpected, but took that and said it looks increasingly likely that we're going to get a rate cut in September. And I think the odds of a rate cut are up to 90%. And likelihood is we'll see another one that before the end of the year. Some are even suggesting we might actually get 3 rate cuts this year. That might be stretching things a little bit. But in any case, that's the way the market is starting to lean. And I think that those rate cuts will start to benefit those companies down the chain. And I guess that's why Russell 2000 so strong yesterday. A rate cutting cycle would be very beneficial to those US centric stocks, which you typically find a lot more of them in the Russell 2000 as opposed to companies that are in the NASDAQ and the S&P.
Former, right? It was flat on the year until a couple of days ago.
Yeah, the performer. And actually, just before we came online, I was just having a look at the relative chart of the Russell, the S&P 500, because you're quite right. The Russell had been quite a significant underperformer, but if you look at a chart of is out, and in fact, those two indices have been performing neck and neck with each other over the last 4 months or so. And one could even maybe make the case that the relative is starting to turn the corner, which might imply outperformance to come from the smaller caps, which would get, we haven't seen that for quite some time.
Yeah, and chart off, please, guys. Have a look to see if we're getting the same in the S&P equal weight, because that's another one. Equal weight. I would like to see, I'm just making sure I get the dollar one. Let's have a look at.
I'm doing it on my side here as well, so we can just talk about it once we've both got it up.
Yeah, so again, flat on the year. That must be in GBP then, because there's no way that equal weight can be flat.
Let me just have a look on mine, just to double check you there. I've got it. It's up in dollar terms on the year it's about 5% up in dollar terms. That's the S&P up about 5%, but also technically starting to look better.
Yeah.
Breaking through some levels.
I could maybe get behind that. You know, I would be very happy having that against my Palantir. But I wouldn't be married to it. That's the problem, isn't it? That's the problem. But if you're right, so what do you think happens for us to get 3 rate cuts?
Well, I mean, let's have a look at what's driving the expectation of the rate cuts now. First of all, it was the labor statistics that came out last week, much weaker than expected. But in addition to that, it was the revisions to the previous months, which really got the market thinking, gee, actually the labor market's quite weak. And remember, the Fed's aims really full employment and inflation under control.
Price stability.
Now, price stability. Now, the thing is, I think we're quite a conundrum now because seeing this weak labor data coming through, so that is obviously a worry in terms of what it's saying about economic strength in the country. Weak labor data should be a reason for them to cut rates. On the other hand, we've got this inflation. Employment seems to be mostly under control. As we said, yesterday's numbers came out in line with the expectations. However, what's not really reflected in those inflation figures yet is the tariffs. Most into effect from the 1st of August, right?
The $1 trillion that Trump has announced that he has taken in tariffs. So that $1 trillion are American companies and American consumers paying that. And as you say, they haven't felt that yet, have they? Because they managed to front load all the inventory in. So they've got the cheap stuff to sell. Now they've got to put prices up.
So I think you'll only start to really see the full effect of the tariffs coming into the inflation figures, perhaps towards the end of the year. The labor market's weak, as we know. The Fed decides to start a rate cutting cycle. And just as soon as they start cutting, what then?
Well, that's what Trump wants. Trump wants, because, you know, his own economic advisor has said, look, the economy is so strong, we don't need lower rates. We need lower rates.
Well, but that is also counterintuitive, isn't it? When I was at university, we learned that when the economy, you raise rates
along with everybody else. And also,
I think that all those
when we're at the top of the business cycle, you're also meant to contract PEs. No, not in this market. This market, we extend PEs.
Yeah,
exactly. Ray Dalio is pulling his hair out.
What's left of it, yeah.
Yeah. So yeah, we've got potential inflation going higher. We've got the Fed under pressure to but it's not coming through in earnings at all, isn't it? The earnings estimates for the year are probably 275 now.
Yeah, they're just 275. This is 285.
Wow, right, okay.
But even calculator there, put that into a PE calculator.
I was with my mum.
I'm joking. My calculator is much older than yours. Yeah.
22.6.
And that's expensive relative to history. But, you know, as we were saying earlier, relative to history, is it a roadmap? Not necessarily. Truly higher PE market environment now. But that's a debate for another day, I guess. I think the 10-year average PE 18, right? So that means that on a 22 times, we're sort of 20% above the average.
I do take the argument that is somewhat irrelevant now that you've got AI margin expansion. But we're also in a CapEx spending bubble. So there are there, such as NVIDIA, that are... Another thing, I don't really buy into this idea that NVIDIA, for example, right, the H20s, Trump is basically saying that the H20 is so obsolete that he's prepared to sell it to the Chinese now. Right? He's saying that Blackwell is everything. It's the super duper future of AI chips. These H20s, they're old. That's old tech. So companies that are spending hundreds of billions on this old tech, and then they're spending on Blackwell, are the Mag 7 just continually have to update capability every 2 years, 3 years, like we update our mobile phones? Is NVIDIA's sales at NVIDIA share price to multiple to contract, and therefore NVIDIA is stuck at $5 of earnings, which means it's on 35 times, and it should be on 25 times.
Well, I think that's the big question, right? Is that these shares are priced based. They just need to slow down to be a little bit less rapid than what they are currently, and you could start to see these things unwind. So, I must say, from a broader perspective, I like I've kind of followed the Gartner hype cycle. I don't know if you know much about that, but it's all new technology tends to follow the cycle, and what it means is you basically go through a peak of inflated expectations, which is kind of where we are right now, where markets are overvaluing the potential for this technology. Sure, it's going to change the world. AI is changing the world, and it's going to change the world, no doubt. Same as the internet changed the world back in the late 1990s. But remember the dot-com bubble, all of the stocks were overvalued, and a lot of them crashed in the early 2000s. Now, could we potentially be sitting in a situation with this AI? I don't know where we are in terms of this early stage of the hype of the inflated expectations, but I certainly won't be at all surprised if we follow the same path that Gartner hype cycle typically projects for all new technology. The question is, where are we on it?
Well, I don't know. We're around about 110 times sales and 600 times earnings. That's where we are on Palantir. Yeah. So, where is that in a hype cycle? When Cisco was 39 times sales in the year and then dropped 88%.
Well, remember, usually these tops take spike and then collapse the next day. It's going to take time. These things take plenty of time to roll. Start to see price action breaking down below. We're aware of that at this point in time, but the time does come that you identifying tops in these overhyped shares. The market pick the top.
So it's RSIs, it's these, it's the 200-day moving average.
Yeah, all those sort of things. But I think just look at the chart as well. You'll actually notice things start to top out. It stops. And then you start to see slightly lower highs beginning to, and that's when you then start to maybe pay attention to it before me. And then the opportunity to put the shorts in if that's what you want to do. But I think trying to short it on the way up is very expensive. very dangerous because these things can run, bubbles can inflate much more than what you expect.
Oh, absolutely. It can go to 150 times sales. Right, Garth, how about next week or whenever we have the pleasure of your company again, we look at past are the key indications to look for?
Brilliant. I'll do some research, talked about people going off to the south of France, and that's where I'm going on Friday.
It's Kieran McKenna. I don't think I didn't notice your message there. The question was, do hedge fund managers not have phones? Yes, but they also want a holiday, right? Don't P&L swings as you had in debt crisis, August the 10th, and you had the Japanese meltdown last year with the carry trade, August the 5th. You don't want to be taking calls all day and trying to defend your P&L against the risk management shutting it down when your wife is ordering a third cocktail of the
Exactly.
Right, Garth, we're going to have to run. We've got Piers 2 minutes. Thank you, as always, and have a wonderful holiday, sir.
Thank you.
I had to teach you how to use this, the mind. The turn wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oh, you're not going to get better than cash returns. Cash returns, come on.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. Start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. Understand the benefits of investing and the limitations of in cash.
Okay, mate.
Straight in. Piers refused to ring the bell.
Yep.
That's it. London Stock Exchange. Get them on the phone. We need a new bell. Right, Eli, top performer there. Let me update that and let's
Can we go, just one sec. Can we just start at the top? Okay.
Go on. Start at the bottom, now we're here.
I'm just looking at the numbers. Yeah, so Eli Lilly, great. So Eli Lilly is obviously took a blow the other day with their or the efficiency, or whichever word you'd like to use, of their diet pill at 10.5% versus Novo Nordisk's pill, which came in at 13%. This is very interesting because, of course, Novo just took a huge yet another huge sell-off on their warning the other day. But the bottom line is net, Novo are winning and trading as if they're going out of business, and in my view are just an extraordinarily level to be buying.
Did you send me an email saying that Wegovy also
Yes.
reverses age?
There was a study out that it reversed age by 3 years. So not only is it being these pills, and they're also
The same.
who was that? It was at Merck, Bristol Myers. Sorry, you look at my Bloomberg here, guys. Sorry.
Well, that's really interesting. Weight loss and reversing age. I mean, sign me
Yeah,
up.
and on top of that, there's a thing here. Who was it? I forget. One of the European pharmaceutical companies is looking to join forces with Novo, and also so it's diet, it's diabetes, and it's also Alzheimer's. Essentially, by the looks of it. In fact, we should probably look into it. But the bottom line is what? Reversing age, Alzheimer's potential, diet pills. I mean, these things are blockbusters, to say the least. I mean, we all know that they've been on the market for a long time, and the market's now getting very competitive, and all the, there's jostling for position. But yeah, interesting.
And remind me, Wegovy is Lilly or
Wegovy is Novo.
It's Novo.
Yeah.
Good.
And also the big boy Ozempic Novo. It's the big blockbuster. Right?
Okay.
Novo have got a lot of cash on the balance sheet, and they're going to use it, I think. But anyway, so that's that one.
Our long-term play, Intel, massive day yesterday.
Big day yesterday. I mean, to be fair, there's every now and then you get a little layup trade, and the comment from last week was Trump coming out saying that Lip Boo needs to go.
Yes.
Right? That was one, and the stock was down 5% on that. Okay.
$19.65.
First of all, Lip Boo went to the White House, obviously he's a smart bloke, immediately, and he said, "Would you like to actually get to know me, Mr. President, as opposed to just assuming that I'm in bed with the Chinese?" And he said, "Sure."
Said,
so
yes,
he came over, Jensen, that's not my name. So he and explained his journey to Trump, and at the end of it, Trump said, essentially, this is not a direct quote, "Oh, wow, that's an amazing story." In other words, I had no idea who you were, where you came from, and this is fascinating. And to be continued. Scott Bassett was there, as was I forget who else. So, and there's gonna be more to see here. But the bottom line is, Trump and Lip Boo, the CEO, are now kind of in cahoots with each other. That's to one side,
yeah.
and now we're going to focus on what the strategy is, because this company is still looking for an identity. Because are they going to get rid of Foundry? Are they not? I think that a lot of it's got to do with that. Trump is very keen to make sure that the US have a foundry. So for them to be winding down their foundry, I would imagine, is probably the undertone of what's really going on.
So
here.
Intel potentially winding down, cutting jobs in the US, boom, attack.
Yeah. Also, Intel, the only US hope foundry business, TSMC is onshoring, and they're mates with Trump, but they're Taiwanese.
Yeah.
Born and bred. I would be shocked if a lot of this doesn't have to do with his fear. That's that. And then we've got Palantir that obviously made an all-time high yesterday for no reason whatsoever beyond the machines grabbing that CPI print.
Right, so let's have one last look at where we are morning, and
Disney up 42 basis points. Wow, it's bearish.
Right, okay, screen off. Let's get into it. So, Producer Phil, do you want to go to the next section on Tech Focus? Right, welcome to our specialist part of the week, when we have the #1 tech analyst in my book in this country. It is Piers Buckworth. So,
lots
Piers,
going on as ever.
For anybody joining the show for the first time, Piers has been covering me for about 15 years, giving me incredible ideas. I've tried to argue as much as possible against him, and then it goes in my face, and I've given in and accepted that he's brilliant. So,
you who have not been watching this show recently, we are at yet another extraordinary moment. I mean, let's just get straight into it. And we'll finish with a micro and start with a macro. Market is so exhausted to the upside, particularly in Mag 7. And just to be very clear, 500, which has 500 stocks in it, two of those stocks, are 15.5% of the index, which is Nvidia and Microsoft. It's an extraordinary situation to see. Back in 1982, it was IBM and AT&T, and that got to 10.2%. So that was a big number, but 15% is a whole new ballgame. So the concentration, clear. Whether that's a problem or not is an open question. It's been debated for many, many years. I suppose it's only a problem if those two companies start to have problems, but there's no problems at the moment. So there's nothing. And every single time we have a potential moment where the market where the professionals, might sell something, they have to step back again. And yesterday was a wonderful example. The CPI, all the whispers, all the hedge funds I speak to, everyone was gearing up for just a slightly hotter number because the expectation that tariffs come into the number.
Which they got in the core.
They did get in the core. The numbers were only not hot in the year-on-year number. The rest of it was kind of in line. And if you look at the detail, airlines were a big contributor. But net, it wasn't hot, and it wasn't, and it was Goldilocks. It was more. It was yet another Goldilocks. So the machines and the retail went bang, and we're up to new.
Morning, I opened my phone and I couldn't believe it was 10 basis points. But now, of course, it's up 20.
Yeah, I mean, it's almost guaranteed, right? Because it's a machine.
There's voices. You are trading this, then
let me clarify what I just said.
Yeah.
In the 20 years that I've stared, the repetitive nature, let's just boil that down, maybe 10 years when the machines and the retail and this whole phenomenon has really taken hold, the percentage, when you get a situation like we just described, everyone has to, all-time highs, massive cash positions, volatility gone down to zero, and you get another bit of machines rampant higher, it is 90% plus of the time you see that happen.
Yeah, the next morning.
Yeah, and it's because there's nothing to stop it.
No.
And they're not, and again, just to reiterate, there's not human beings trading that. It's just machines doing their thing. Tick, 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 tick. Just, and the US Open, bang, that's 90% plus that's going to happen, especially because, and it's random. So we'll get to the Open, it'll probably try and go bang. Top customers, but they have a huge amount of debt because it's a massively capital intensive.
Right.
$15 billion worth of debt. And that was the reason why the stock was down last night.
So this company is shovels. They're shovels and then renting
shovels
it
of
to
the
the
picking.
gold.
It is capital intensive, of course, but I have no doubt that this is going to be a winner, this stock. They have to deal with the debt. And at this, the cash burn at the moment is definitely a problem.
Mm-hmm.
Might have to raise money. It's hard to tell. It's going to be a little bit volatile, I will imagine. Let's look at the valuation of this company. Listen, it's fair to say that this is a hot AI stock.
Yes.
Right? Okay, there's no question about that. So let's put it in the same category as Palantir, shall we? 20 times sales, 200% 6 times sales, 48% revenue growth.
Let's go through that again. CoreWeave's price to sales.
20 times.
What is Palantir's price to sales?
126
Which one's growing faster?
by a massive margin. CoreWeave. Like literally, it's 4 times faster. So
a much accelerated rate. And CoreWeave, in 2 years.
Do you think CoreWeave? I'm a bit worried about the balance sheet, to be honest. But again, that doesn't really matter. We all know that. Look at Meta. Every another 100 billion, the market goes bang. So I mean, I think CoreWeave. I actually wanted to short this because it had just,
Yeah.
Then I went and looked at it closely, and I realised that that's wrong. And I think that this is actually going to be a bit. Where do you buy it?
Yeah.
Now, it's perhaps
down 9.
I personally, they only listed a couple of months ago, right? So I like to give companies 3 months or a quarter, at least a quarter, if not 2, as a public company to get a feel for what's going on. Plus, it's hot, right? It's really hot.
Any negative rhetoric in AI and this thing's.
So this is high. This is a high beta play on AI.
High beta, high risk.
I mean, this is on steroids.
Right. Okay, next.
Yeah, so next up, what have we got? Questions?
Do you want to have a look at Micron?
Sure. Micron is Donny 1. Micron is, listen, there's a few people who have tried to come out and sell this. Brokers have come out and tried to sort of downgrade it, but let's say the top 20 analysts, the rest of them are all big buys on it. They just raised their guidance again, not only in DRAM, which is obviously the nuts and bolts of their business.
Take everybody through what DRAM.
DRAM is direct random access memory, which is the most commoditized, old-fashioned form of memory. It's just the same as being involved in copper or whatever it is. It's a commodity, whether it be that goes in cycles. There's nothing particularly sexy about it.
No scarcity.
It's a secular bull under them, which is the AI and the high bandwidth memory, which is being tailored specifically to the likes of NVIDIA, who are their new customer. So these guys are going through an inflection point. So AMD, I mentioned this a while ago. AMD has gone through their inflection point. Through an inflection point, finally. All right, this has been a battle for many years. A bit like Freeport, actually. It's very similar to Freeport, right? It's exactly the same. One trades on copper, one trades on DRAM, and it's got a similar price action, and that's just the way it is. But this is a different kettle of fish now. It had a huge breakout, a pullback from that, consolidation. Right? One of the only ways to play AI that's and that's
not that people pay attention to valuation anymore.
Not that it matters, but the big funds do, right? So the long who are considering adding a value name, whether it be Broadcom, everyone in the world is already long Broadcom, and then you've got Marvell and you've got Micron as options, which most people I would imagine are not long. And when I say people, I mean professionals. The answer to your question is I really like Micron. Particularly after they've just raised their guidance again, which basically just is a middle finger to those people who downgraded.
Okay, so
I'm just a bit. So yes, buy it on dips would be what I'd say.
But conviction level.
A conviction level for Micron.
It's not in your portfolio.
It's not in the book. Because it's just not in my % lower. My brain works. I'm really bad at chasing things. And I need to get better at it because that's it for forever. I love Micron, but I'd wait for a little because it is a volatile stock. Remember that. This is not NVIDIA. It does have volatility, and that's just the way it is.
Which one of the European names is the DRAM name?
There's none in Europe. No.
Right. Okay.
No, the DRAM names are Samsung, SK Hynix, Micron.
Okay. Now. friend, the Marvel.
Marvell, yeah. So they, again, this is in the same boat as Micron, right? It's not a popular long with the mutual funds and the long onlys. A lot of people don't understand what they do. It's going to take some time, and it's subject to volatility and days up and down. Like, great example. It was down. The day before yesterday, it was down 2%. Every other stock in its group was up.
Yeah.
Completely random. It's one of those stocks. But if you look at the chart, it's held on to the technicals perfectly, which is encouraging. I just think this is one to own. I own it in the book, own it here, and the major reason for that being that no one really, and it's not remotely crowded. Technicals have held in, and it's in a great space. So, and also this thing can move, right? When people decide, oh, it's time to get into Marvell again, it really moves.
So we are looking at stocks here that analysts, i.e. the professionals, or at least they used to be professionals. Of course, if you're Jan Hatzius,
dumb money.
You're no longer a professional. You are Trump's idiot.
Oh, really?
His joker,
oh gosh,
jester. At these companies for 20, 25 years and are experts, and they're saying they think, similar to Micron, Marvell has 17% upside against saying Palantir has 17% upside.
Yeah, so again, but just let's just be clear about analyst recommendations. And listen, I don't want to be just sounding like I'm being rude who work very hard and these companies, but just the nature of the business is that the analysts' recommendations are just basically just kind of irrelevant, right? Because they're either chasing the stock, after the fact, this, which is kind of pointless.
Yeah.
And then if they warned next week, okay, now I don't like Marvell because they just said that. So there's no view being said. It's just literally
it's like technical analysis.
Yeah, exactly.
Well, sorry, we've got Axel on next. He'll kill me.
Pelican. I don't know Pelican, mate. I'm sorry.
No, Pelican is the.
Sorry.
That's
the name. Sorry, yeah.
A good friend.
Oh, Texas Instruments. No, IPO. So IPO. Which IPO?
So it's called Bullish. Upcoming called Bullish.
Oh, really?
Top of the market.
Sorry. I'm going to go immediately and work it out, but what a ticket code.
Yeah.
That's even better than having blockchain group as your ticket code.
So, Boise, thank you for sending me this yesterday. It's the first time I had heard of it as well. Now, where... Sorry, I think I'll have to find that later. But, right, what have we not covered? Because Angeline wants to come in and grill you for 5 minutes.
There's always more to talk about.
It was a great recommendation by Piers.
Oh, great. Nice to know at least someone's listening to me on this stock. So, yeah, I mean, crashed it. 217% revenue growth versus 150. Still very expensive amongst the analysts, but it's on track. And 16, 17, I'd kind of look to take profit.
Wonderful. Mate, I would love to chat more, but I do have to give Angeline a chance to grill you. No. Go anywhere. Stop it. Go make a cup of tea. We'll be back in 1 minute. Bye while you're waiting.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading and out. And with our 24-hour servicing, support is always just a call away. Not all options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an
Welcome back. I've been waiting outside. Turn to grill peers here. Rich starting you off, and then Ange's here to finish you off. On that,
Wow, we're really cooking with gas on this show.
on that note, we missed you, peers, because I've been, thinking about you all of the week when we've been seeing this constant trickle into the White House. The Tim Cooks, all the interesting things coming out of the tech sector, NVIDIA, AMD. I mean, where is this all going to take us? Where is it going to end? Are we going to see loads of tech companies just, bending over backwards and saying,
Well-
whatever, Mr.
This for Trump. You can love him, you can loathe him, you can take bits and pieces of what he does and think it's crazy, but on the whole, he is genius about him. And it's all very grey and very difficult to digest, but it's continuous and it's endless. And he did it the first time, and now he's doing it on steroids. So
It's like a spell, isn't it?
yeah, I mean, and listen, he knows he's a deal maker, right? He knows what he's got, he knows what they've got, and he does a deal. I mean, listen, this NVIDIA AMD thing, where he's basically got them to their China revenue. It's got the work, but where does it? If it's just those two companies and it solves the China issue, it's just
That's what I do.
it doesn't really make much difference to their really, a little bit, but again, the market doesn't care, right? All the market cares about right now is that inflation print and the overall vibe.
Yeah, and we talked about algos. I heard you talking about this with algos. You think maybe the whole kind of Europe as well, feeding the algos?
Yeah, I mean, listen, it's an open question. I mean, the algos is not up for debate. We all know that there's a lot of passive money being and a lot of algorithms trading Europe, but a kettle of fish in Europe, right? I mean, the retail thing cannot be understated. It is, there's just people, whether it be using AI trackers, copying other people's also look like a
Do you know what it reminds me of? It reminds me of Tron.
That's terrifying.
The
I mean,
colors and the movement and
But you sit next to someone on the train, for example, on the way home, and they're sitting there with this beautiful, colourful screen of whatever trading app they've got on, and they're just going, and they've literally got a menu of stocks, and it's the Magnificent Seven and 10 others. We all know them, and they don't know what the sell button may as well not be there. Press buy, and they've got feeds. It's just rigged, and it's not going away anytime soon, if ever. Off air, the only thing that stops this is when the professionals step in and sell it, and that only happens when we get a macro event. Yesterday would have been a good example. If we'd got a hot print, would have got whacked.
Do you think lots of waiting there?
Well, listen, I don't know. I mean, I only speak to hedge fund managers on a daily basis. Is my sort of little world. But
Pelican saying, yeah.
But what I don't know what that means. Enjoy the match, right? Whatever. So it's not everyone, but like all the people that I speak to, which is a cross section of hedge funds who sit in London, Geneva, Hong Kong, all different types of personalities. even the most bullish ones have cut their just not chasing it up here. Right? And everyone's bullish now. I mean, on TV, you look at some people like Rick Reeder, who runs BlackRock's fixed income. Well, he's the head of asset allocation, a smart guy. And he was just saying some amazing stuff yesterday. I mean, there was here.
Been, bearish for such a long time.
No, well, yeah, I mean, so many people have. It's less so in America. In America, there's a lot more who embrace what's going on, trade it. But the rest of the world, Europe is a wonderful example, right? The Europeans hate this, right? Everyone's grumpy and like they don't like tech and they don't like growth and they don't like hedge fund managers who sit in Europe in general are quite right now. But anyway, it is what it is. Listen, but then the machine stepped back in, and now, like today, I'd love, like, if anyone can dig this up, the number up, I'd be really, very interested to see what it is, what the actual in this market today
Compared to computers.
compared to
My favorite stock of all time, Nvidia, 183.
you and everyone else.
I just want to know, like, whacking up the screen for you, because obviously everyone's waiting on the Blackwell super chip, the GB200. We saw that deal recently, Nvidia and AMD. Is the trade now, because everyone's watching that 200 number, right? Level, and then sort of get back in and pile back in if there is a correction. If there is, trader friends, a correction. Let me just take you through some details of what this 100 and for the markets. It is meant to, in very simple terms, make everything super, super fast. It's got, if you are like, look out for the exaflops, petaflops, whenever Jensen Huang talks about it during the press, then this is 1.0 AI performance there. All this means it becomes even faster, and it allows the system to do all the things that are needed for the. Elon Musk has been talking, anything that is Neuralink, helping everything from construction to, try to find any sort of cure for diseases. And this sort of performance leap, if you like, from what it now sells, the H20, the H100, take a look at. They sell this to every big tech known to humankind, right? Are we still at the precipice of a longer term bull trend, or do you think correction? I know you think
No.
I
don't think that we're due a correction. I know. Listen, the price action that I'm looking at in Nvidia is totally and utterly exhausted. Yesterday, it managed 40 basis points, right? It was down all day long, and it managed 40 basis points purely because I guess the machine. I can't see in the short term how Nvidia, in the absence of some news that we haven't heard of, it's probably the poster child for exhaustion in the Mag 7, that and Microsoft. So yeah, my thing, listen, if you're long Nvidia, is this the all-time high? I'd be very surprised. Of course not, probably not. Who knows? But in terms of the short term, it's exhausted, utterly exhausted. I mean, look at it.
Since April, mid-April.
This is not never. Does it end today, or does it end in 2 weeks' time, or does it end in 4 weeks' time? I don't know the answer to that question. All I know is that there will be a sell-off. Something will happen.
There will be.
Because that's what always happens. It's fine. That's a separate question. Yes, we'll probably buy the dip in the market. The problem is that everyone on earth is going to buy this. Markets, when everything is just as there's not a single thing. If you ask today, like the market possibly get. Everyone's bullish. The price, there's no volatility. It's just the best thing. And it's most often something that no one's predicted. A bit of news, something, whether it be, you know, we're all cruising along with no concerns in the world, and then DeepSeek came out and that was down 22% in one day. Something like that, who knows what it's going to be, will happen.
Has been, and also loads of people coming on talking about, you know, we might have some sort of black swan event to link to tariffs. I mean, at the beginning of the year, we thought it would be tariffs, but it hasn't come to pass.
Swan events is a futile exercise. Going to be, I mean, I'd be surprised if it's tariffs.
Yeah. Speaking of which, that's softer than expected, or rather the market taking it as a softer than expected reading of today. Now that, you know, the data is being meddled with.
I mean, again, how do any of us know the answer to that question? But really, ship daily basis on data, which that labour market data the other day. So there's a lot of things that make me feel a little bit uncomfortable, quite frankly. But this is that thinking about the market too much, and also knowing, having experience in the market and having just overthinking it is a disability. It's much easier to be a retail investor just playing the momentum. It's so much for a living. So it's very hard for a living right now. Because if you're managing a book, which I do, I manage a book for a client, and you can't just be buying Palantir, but you can't be doing that, right?
Yeah.
It's not responsible and it's not sensible. You have to make money in a if you're just punting around on an app, good for you, but that's not what the professionals are trying to do. So, moment.
Marcus Kane saying silicon tulips. Response to that. Also, we've got very little time left. Just want to quickly check Palantir is the very last one, because Palantir also moved. Many of our clients and trader friends here asking whether everyone's watching that too. Your thoughts, 100 or stay in? What's your call, Pierre?
My call is if you're long.
RSI now.
Cares if it goes from 187 to 200. Sell. Then grab. What are you doing? Knowing that it's going to sell off there, which it will, because it'll be massively overbought and there's no other price targets above that, and that it just will, even if it's, so we'll end up back where we are anyway. So the answer to that question should be, I think, fairly. You can sell here, back down here, or just sell here.
Questions for peers? Button, because then we can bring more of this expert analysis to you. Of course, this is driven by the community, and also make sure that Piers, send it to us on IG.com and I'll put it in front of him. Thanks so much, Piers. Good to have you on.
Yeah, good to be here, albeit fun.
We've got Charting Crypto up next with Axel, so any questions, do put them on the chat.
Today, we've recently launched our Save Our Stock Market campaign. And get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK as a whole. There's some great companies. Just all rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this. From cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations.
Watch AM.
Well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily reports of all the action that happens the show is finished, and trade of the week and psychology of markets.
And don't forget to hit those like and subscribe buttons for more.
We're watching a crisis unfold in the UK, and once the envy of the world is in a dangerous downward, the UK is stuck in its first mindset with far too few people For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more investing while saving a strategic national asset before it's too late. You can read more about IG's SOS website.
Okay, guys, before I teach you
Hello and welcome back. So, and first of all, I'd like to thank Chris Beecham for filling in for me whilst I was on holiday. And I'm also helping boost global markets and cryptocurrencies as well, as we saw in the US came in rather. Took that as a sign in September, and the probabilities for a Fed rate went from 88% about. So it's nearly being priced in with 100% probability now of seeing a 25 basis point rate cut in September, and the world for example, making new all-time high. It's sixth, I believe, consecutive all-time high. Yesterday, very strong. Rand is also heading higher towards our 1.8 Fibonacci extension that we mentioned many, many moons ago. And I love those because if you have time, it's going to be hit, but point. And when the market then comes to that level and reacts off it, you can see that they can be quite powerful. And what we saw here, you can see I had 161.8 Fibonacci just around the 122,000 level. Less steep than it is for other cryptocurrencies, and we'll get to that later on. But what do you do here from a trading perspective? Well, I didn't mean trading from investor perspective. If you are still long holding Bitcoin, then yes, the trend is still your friend. You can see Elliott wave correction to be over. So basically what I'm saying is, from a technical perspective, as long as we stay above the lows seen here early August, in this case I think around $112,000, there above that. See, if we were to break above these highs, the high we saw on also the July high, and in doing so above the 161.8 Fibonacci extension, well, you look at longer term time frames. And what we've done here, you will see on the monthly chart, I had my Fibonacci extension target here, and that was basically made going back quite a long time, and basically projected from the lows down here in December of 2022, and that's now but the next bigger one is another 100 Fibonacci extension, and this one here is basically the move down from the December low to the high C 2024 and then projected higher, and that one comes in around the $150,000 mark. So that could be a longer target for Bitcoin if we were to take out these recent highs. And as you can see, that is still pointing to the upside, with further upside looking likely, or more likely than any downside. Now, if you believe Bitcoin might fall for you to have perhaps a better entry level, it would have to fall through this uptrend line that goes back to June, as you can see here, for this view to be invalidated. And to be quite honest, we would have to fall through the early August low for the bullish view to be questioned. So Bitcoin still looking bullish, but the rise we saw yesterday was around at 1%. And if you compare that to the rise we saw in Ether, it was a very muted response. And this is Ether. As you can see here, a very strong up move. We've risen about 13% in just the last couple of days. And yesterday, I think we rose about 8%. So we have this outperformance of Ether compared to Bitcoin. Well, what is happening is basically investors look at Ether merits, and not just in the context of it coming after Bitcoin, if you want. And basically what we saw, ETH, we those been on the back of more Ether being seen due to its recent network upgrade. So basically, investors are now, or seem to be, shifting. Technically speaking, what we've seen is, if I go onto a weekly chart here, that basically we have broken through some really key resistance. Here, I put down support now because of inverse polarity becomes support. But can you see that resistance of the March, May, and December 24 highs was being broken through in a week, last week, in one sweep. So that tells us that there is a lot of momentum behind this move, and that further upside does look more probable than any downside reversal in the short term, at least. Market. And then being broken through, everyone who in the past went short, for example, here, now needs to scramble to buy back. That's why this push to a. What are the next upside targets? Well, if you go to the left on my chart here, on this weekly chart, you can see the next target is the November 2021 high, and that was made at 4,867.95 on Ether. Basically, that is the all-time as well. And you can see here on the monthly chart that we are now basically within 6%. Because of what I've just mentioned, and also from a technical perspective. Now, what is also interesting is if you look at the spread between Ether and Bitcoin here, but as well, you can see that Ether basically outperformed Bitcoin from the early May lows. Then we had sideways trading, and then we resumed the trend in mid-July. And then the break out of that resistance area had the July highs, catapulted us up to this high here. And if you look at the on Ether versus Bitcoin, you can see that there is a is whether we can break through this long-term downtrend, which goes back to the all-time high in 2017. Just below there, we've got another downtrend, which you can draw in from the September 2022. And that one is of being broken through. So let me just make this slightly thinner so you can see that we are currently trying on a monthly basis to break through this 2022 to 2025 downtrend line. If that were to be the case, you would expect the long-term downtrend line to also be hit, and that currently comes in so basically telling you that the odds are greater for Ether to continue Cardano, I believe. Just let's have a look at Cardano. Cardano, of course, been away too long. Basically, what we can see is that we're also bouncing back. Basically, all the cryptocurrencies. Anyway, as we are in this Goldilocks scenario at the moment, we did have an inflation 0.7% year on year, slightly below. Inflation did slightly over the last 6 months, and they're Fed to cut rates, and yet the inflation increase because of probably the tariffs, but the tariff impact on inflation in the US hasn't been. This relief rally going on now. Sentiment is also through cryptocurrencies, and you can see with Cardano here that we are also heading to our July slightly higher at 93.39, and you can see here the momentum putting high is still looking bullish here. Basically, as long as we stay above the last reaction low, and that low was made on the cryptocurrencies as well. Perhaps this bullish view might be invalidated. If you go, for example, on Solana, I'm going to all the cryptocurrencies are heading towards the July highs, and the same is the case, as I said, just here with Cardano. Well, if you but may well continue add a consolidation phase on this weekly chart and held around the that's 0.51 mark lower, and now leg up. So I would expect the second leg up to perhaps take us back up towards these highs seen in January of this year and also in March of this year. That would mean around 112 to 116. That is a distinct possibility if we were high. And that momentum is more likely to continue, reversal to happen. Now, with regards to the data, which may drive this move, basically inflation data in Europe and also in the United Kingdom, but I don't think that's going to have impact on cryptocurrencies because they are far more focused on what the and the big data payrolls. But with a probability of 94%, according to the CME Fed Watch, of investors basically expect rate cut to be seen by 25 basis points. Especially now where Western Hemisphere countries basically are on holiday and perhaps trading volumes are slightly lower, which means that swift movements and volatility actually increase. Further momentum take us to these recent highs with regards to cryptocurrencies that we saw in July. I've gone through I've gone through Ether. I think I've answered all your questions, and basically that leaves me with hoping to see you back next week. Thanks for watching. Bye.
CPI comes in on the screws and non-farm payrolls may be canceled. It's Tuesday, August 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, taking you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. What a day it was for U.S. equity markets. S&P 500 clocking a move up to a new all-time high, right around 6470. The NASDAQ breaks through 23,900 here. CPI comes in right on the nose, 0.2% month over month for the headline and 0.3% for the core. While there's evidence of tariff-induced inflation, it's not running away, and quite frankly, weakness in other areas is paving a path for a September cut, possibly. Well, that's if you ignore the Fed speakers this afternoon who said that they're still not convinced a September cut is possible. I digress, though. Looks like we're back in reflation territory, gentlemen. Economy's still holding up. We're going to get rate cuts. Bonds break down today. We have dollar getting hit hard, as was pretty similar actually to what happened in September last year after the Fed cut. Dollar doesn't really begin its climb until October. I digress, though, Dylan. You deserve the floor. We've been talking and thinking far too much around here, my friend, and you have not.
I mean, I almost feel like I hesitate to speak because words tend to become correlated with thought. And if I speak too much, I'll get accused of thinking.
Should we sit here in silence for the next 55 minutes?
Quietly sit here without any thoughts in our head and just enjoy all the money we're making. No, I mean, listen. The problem with thinking, as we've discussed at great length, is that it leads to rational analysis of a potentially weakening economy, a potentially slowing economy, all these potential liabilities that ultimately are overwhelmed by basically trader investor sentiment. And I think you said it kind of perfectly there just a few seconds ago. The combination of sort of the overwhelming optimism on the artificial intelligence side, combined with the optimism for the rate cuts, put us in a tough place to be short as a worldview. Even though again, as I've said, I feel like I could make a great case for being short, but I feel like that's why I kind of make my joke about thinking, because once you're short, you're kind of nowhere because you're up against this sentiment issue, which is the real problem that we have right now.
It's a sentiment issue, but everyone's already long, right? I mean, we discussed this earlier today, and let me explain, but UBS just put out their new report. CTA exposure to U.S. equities is in the 100th percentile now. Never been more long. Everyone's fully invested, and yet it doesn't stop the market going up today. I can't help but see that we have thus far maintained the rally that's been in place, the channel, Dylan, that we were watching last week and the week before. It carried us here since the U.S.-China trade war detente over in Geneva, Switzerland back in mid-May. Mm-hmm. I'm just looking at this. This is just very simplistic. We have a range. What's the size of the range? If we break out, add it to the top. If you break down, subtract it from the bottom. We could hit 6,700 here by the third or fourth week of August. And that would not be obtuse given how the path of travel has been going back to mid-May. So, Ilya, why is the market not caring at all about anything?
Well, I think it's straightforward, actually. I did not think this is obviously what we'd get today, but the market actually reasoned that this CPI data meant that a September rate hike, or rate cut rather, is more likely rather than less. If we look at the pricing for the latest in Fed funds futures, it's very clear. The likelihood of a rate cut in September today is 94.4%. Yesterday, it was 85.9%. The important thing between those numbers is that 94 is higher than 86. And so the markets are more convinced after this data that the Fed has enough clearance that essentially they will have the ingredients that they need to cut in September, which is, of course, what the markets want. They want the Fed to get on with it already. And the most important aspect of today's data was, will they get data that allows them to do it? And they judged, looking at this data, that yes, there is the fastest goods inflation that we've seen since June 2023. Yes, that goods inflation is growing, whereas services inflation, although higher, is diminishing. And they judged that although this is certainly at the core a 5-month high on inflation, it's not the kind of thing that's going to stop the Fed from doing something on stimulus in September. And I thought that was really it. And if you looked at the Russell, it's at its high, but very clearly much more alive today than it's been in days. If you look at the S&P, it's at its high. But if you look at the NASDAQ, it's actually taken that high out. And so, as we were just saying on last call, in the spirit of not thinking and trading the price action, if my assumption was back when we saw these highs on July 31st and into the beginning of August, if the assumption was that's a top, let's test that theory with a small short. That theory has not been invalidated in the S&P. It has not been invalidated in the Russell, but it has been invalidated in the NASDAQ. So the only thing to be done here is to get out of one's NASDAQ shorts, if one has them, which is exactly what I did.
The technical path here, though, I mean, if we're going to see the NASDAQ, which should be the leader, it's the tech. It's going to pull everyone along. But I'm just thinking if we're forget all the narrative, we're going to look at this purely technical. The NASDAQ's closer to channel resistance than the S&P 500 is.
Yeah.
And it would stand to reason that the S&P 500 and Russell, if we're really seeing a market move around this rate sensitivity, that cuts are coming, and whether or not that fans more inflation, be damned, because it's going to boost asset prices at the end of the day. At least Russell companies are going to have lower floating debt obligations, and they'll have a chance to be more profitable. So perhaps this is the jumping point for a breadth expansion, which quite frankly had been lacking in recent sessions. You can look at RSP today, the equal weighted S&P 500. That's up 1.3% compared to the big guys, 1.05. QQEW, likewise, 1.24%, basically on the nose for the headline one. But it ends the window. There was this window here where it's constantly the market cap outperforming the equal weighted. It was MAG 7, and then everyone else was kind of struggling. You're seeing that unwind a little bit today, Dylan. You're seeing a little bit more spreading of the love here. And I think we got to go back to the July playbook. I mean, for me in the NASDAQ, I have not touched it. I have not touched it since the end of July. So I really haven't missed out on anything. It had its big spill lower. It's about 120 points from where I got out at the end of July, but it's now broken out. It's just got to look out 4 to 6 weeks and say, hey, let's look at 25K, I guess. Can I entice you into that, Mr.
I agree.
Redigan?
I mean, yeah. I mean, I don't even think again, I believe you have to be long and get longer until proven otherwise. I sound like Ilya in reverse here, but I really believe.
I mean,
it's a beautiful thing.
You can't argue with the fact that it is not proving otherwise here. So what can you do? I mean, you can have a question as to whether you want to be long or you want to not participate. If you get a breakout in the Russell here, it isn't near its record highs or setting record highs. So ostensibly, you have more room. So if you wanted to get long something, and you thought that, you know what, I don't want to get long the S&P at the highs. I don't want to get long the NASDAQ at the highs. From a trading perspective, and again, I want to be very clear in separating the trading perspective versus the investing perspective. The investing perspective, holding these things for the AI supernova to fully unfurl over the economy over a period of 3 to 5 years, something like that, obviously that's a different bet than do you want to tactically buy the NASDAQ here for the next 45 days. So just as nothing about this says that the NASDAQ is turning. Nothing about it says that it's going to necessarily rally up a storm in the next 45 days. So
I'm just so pissed at myself that I've missed this.
So if you have some sort
Too
of
much thinking.
Did I tell you?
I'm saying, so if you're leery of saying, I don't want to be a tactical buyer at the highs, then the Russell lets you be a tactical buyer not at the highs.
Well, here's the good news. If you like to look at sector rotation, today is the day for you to find zero warts. The worst performing sector today is staples, which still rose by 0.28%. Real estate, utilities are down there as well. Okay, healthcare near the bottom. Up at the top, home builders, regional banking, banking in general, home construction, metals and mining, retail, telecom, semiconductors, biotech. All that early stage growthy stuff, Ilya. And here's SMH.
Yeah.
2 days after the Trump administration slaps NVIDIA and AMD with a 15% VIG on their sales to China, the market says these companies are more valuable than ever, which Dylan, I think, comports the rate cuts, but also you're going to get looser monetary policy, and we're going to have trade open with the second largest economy. You're going to have 85% of a pie instead of zero. The layer of infrastructure that undergirds the global AI arms race is going to be built on American technology. That's a good thing, isn't it?
I mean,
so we should be rooting for that outcome. From a trader's perspective, what's the news?
Which outcome? I'm not sure I'm tracking. You're saying we should be rooting for the tariffs in this context? Is that what you're saying?
No, we should. If you are someone who's been long tech stocks, I've seen a lot of people quibble about the fact that they have to give a 15% VIG to the U.S. government. And we may have political economic considerations to discuss, but from a trader's perspective, our job is to identify a situation and predict an outcome. And we make money whether or not we correctly predict that outcome here. So if you're a trader right now and you see that they still have open one of their biggest markets moving forward, and China's going to build their AI infrastructure on top of NVIDIA chips, stands to reason that NVIDIA chip demand is going to be pretty high moving forward. So as inference grows, you need more GPUs, and the more GPUs you can do more inference, which invites higher electrical bills for rural people in Pennsylvania and New York. But that's a different problem.
Or is it we have this folks? I think they're folks, not more than people.
I think that also constitutes a person, Mr. Radigan.
A folk.
Very elitist of you. We'll move on. So we have this exuberance here. I still think that we are chasing the sun, but there's nothing that says anywhere in this market performance that should be doing anything other than going back to riding the rails higher, Dylan. And kudos to you for sticking it out during that jobs market blip at the start of the month, which spooked me because I looked at too much data and thought too much about it. But
don't worry, we're going to cancel all that.
I mean, there's nothing like a bunch of data to get you to thinking.
Well, the good news is we're not going to have to do much thinking moving forward.
Thank God.
There's a new economist, E.J. Antoni has been set forth to replace Merrick McCaffner, mispronouncing that name probably, from the former BLS commissioner. According to Axios and others, this gentleman is saying that we should suspend the jobs report entirely, Dylan. Forget seeing bad news and bad numbers. Bad numbers don't exist if the jobs report doesn't come out. Now, I understand there's going to be the quibbling. If it's not accurate, there's all these revisions. Why should they report it in real time? Why not do it quarterly with more accurate info? Sure. But the jobs data has been bad. And suspending the jobs data at a time when it's been looking worse, I don't know, Dylan. This all just seems like, I saw this headline today and I said, like, are we really doing this? This is all kind of crazy.
I don't take it that serious. I mean, I'm sorry to be sort of, I don't take this very seriously. I believe that there will be no suspension of the jobs report. Like this is clickbait. That's what the kids call this, is clickbait. Obviously there is no world where there's not a jobs report. One. And two, there's no world where the jobs report is not a sloppy, messy, miserable number. It's always been a sloppy, messy, miserable number. and it's easy to criticize, and it's always revised. And I think Trump is just sort of exploiting that to his benefit, because it's in general to Trump's benefit to diminish the perceived credibility of all data or all facts, because Trump likes to exist in a world where what he says is what is true, and the only thing that can potentially contradict his preference to have what he says be true is some other observable fact. And so the degree to which he can sort of compromise the perceived integrity of anything is to his benefit. But I don't believe that that means that he will actually suspend the jobs report, or even if his nominee wants to suspend the jobs report. It just doesn't.
You can say it doesn't matter.
I don't. What I believe doesn't matter is the rhetoric. In other words, I believe the employment market. It is empirically observable that the rate of employment, the compensation offered for employment, and the demand for labor is one of the most fundamental economic economic gauges or components of any economy on earth. To not measure it is not an option. Let's say the government says they're not going to measure it. Let's say then it'll just make the ADP number or some other private market number more important. Like it'll just be to someone else's. There will always be a measure of the jobs market, I guess is my point. Even if in the sort of most extreme expression of the United States government deciding they don't want to measure it, it will be measured in a way.
I bring this up because I could see this becoming something that people say, oh, I'm not going to, it's part of the wall of worry for stocks. We're still going to have jobless claims data. Those are collected on the state level. And there's a lot of research out there that would suggest, and I'm not saying I necessarily believe in this, but there are data points out there to suggest that following jobless claims as a recession indicator is much better than following non-farm payrolls, because jobless claims are released weekly and they're based on actual applications to state labor departments. Whereas the non-farm payrolls reports have to be revised a few times before they collect a big enough sample to make an accurate assessment. Mm-hmm. So, Ilya, even if, let's just say, run through the exercise, we lose non-farm payrolls for a month or 2 or 3, looks horribly politically. There are other ways for us to infer this data and to get a gauge of what's happening.
Of course.
Right?
The markets will just look elsewhere. They'll look at the employment components of the PMI numbers. They will look at jobless claims. They will look at other things. The markets will find a way. The issue is that you do this and you score political points, in the sense that the next time that you go out there and you say this is the greatest economy ever, and people go, well, says who? And you go, well, we don't have data to say otherwise, not official data. And if people then turn to ADP, well, ADP is easy to cow because it's a private company and you're the government. And as the Soviet saying goes, the government always has one round in the chamber. Look at how the administration has been able to cow other companies into basically saying they surely would have no problem doing that with either ISM or with ADP or whatever else. Obviously, jobless claims then become just another thing that can be canceled if need be, if it tells an inconvenient story, et cetera, et cetera. It's a slippery path. But will markets still find themselves a gauge? Of course. They'll find something.
Dylan, let's just get rid of all the Trump-related BS in the market today. Trump told Goldman Sachs CEO that he should fire their chief economist. I don't recall another time a U.S. president telling a bank CEO how to do their job. I'm certainly thinking how that would be perceived in the
More
Obama
so
era.
the other way around.
Yeah, right. Are we in the loony bin yet?
My question is, I don't know. I don't think people take Trump seriously.
Is that why Goldman's up 3.36% today?
it'd be one thing if like a president that was taken seriously was saying these things. Then I could understand where people are like, well, this is a real concern. The president's trying to manage the staffing at the bank. You know, it's crazy.
I mean, he called out Goldman. Goldman was the best performing bank today. Jamie Dimon wasn't called out. JP Morgan's only a wimpy 1.13%.
Do you think people take Trump seriously when he says these things?
Yeah, I do.
Do you think?
Do I take them seriously?
Going to fire their economist because Trump said this?
No, but doesn't it speak to this greater level of exerted centralized control or effective control over the economy, or attempts to sway the economy?
No, it just speaks to he is a known quantity. This president is a very transparent and known quantity. And the only thing that's unknown is the degree to which his intent to have total centralized control of all things, his ability to consolidate power, is actually achievable.
Were we overthinking things yesterday or underthinking things yesterday, Dylan? We were joking like, well, if they're replacing the BLS commissioner and the BLS replaces, does the CPI report, why do we bet on a hot number? Should we be that kind of cynical people around every federal?
The numbers are rigged.
I think a trader has to be
by the
cynical.
president.
Yeah, if it's going to be a number and it comes out and helps Trump make the case for rate cuts, shouldn't we assume it's going to land in that corner for the next few months? Like jobs will be good, but not great. And it's going to show slowdown, but not weakness. CPI will come in on the screws. Claims will edge up, but not scare anyone. It's kind of like our CEO strategy. Shouldn't we just be looking for all the CEOs whose companies need to go to the White House?
The numbers
tariff
are
exemptions?
just a scripted sequence.
I'm saying, should we be that cynical? Because that is something, if I look on Reddit, I would encourage actually, chat, go look on Reddit. See what people are saying in Wall Street Bets, on super stonks, on all the various little iterations of the investing and trading subforums there, and see what people are saying about the data. A lot of people are saying the data doesn't matter because it's cooked. There are people who are saying that the data is all cooked now. You can't trust it one way or the other. So just buy the dip because it's all going to be good. I'm curious because this is not just like one of my crazy thoughts that I feel the need to bring into the world and force upon the overtime viewers, but it's something that I've seen in other media forums among retail traders. So I'm genuinely curious to see how other people are approaching this particular issue. If you never trusted
issue being the suggestion that all the data is a scripted,
unscripted, do you respect it more now, less? Have you ever cared? Does this make you want to look for different sources of data? Does it reinforce the view that if you're just a purely mechanical options trader, this is why I never looked at the data to begin with, right? I mean, that's certainly a Sosnoffian perspective that I've talked to people about off air. He's like, yeah, you can't ever trust the government's data. That's why you don't look at it. You only look at the volatility.
Mm-hmm.
So I'm struggling.
It is a different thing, which is just the general that by the time you see he's not suggesting that the data is not real information. He's suggesting that the real information is already priced into the market before you can do anything. That's a different, maybe the same sort of headline, which is ignore the data, but it's a very different rationale for why.
Yeah,
that's fair. That's a better explanation.
Yes, and also, and not to put words in Tom's mouth, but to my mind, it's that, and it's the markets are so. The markets will read that even when the markets respond to the data and there's some sort of an event risk component, it's not consistent in the sense that data up doesn't mean market up, data down doesn't mean market down, data down doesn't mean market up, depending on what the data is. There's not a consistent relationship. So you either do what you and I do, Chris, which is agonize and read and watch the flow for years and years and years and try to get a pulse on what the context is for a given piece of data. Like, oh, well, there's going to be a rate cut. Does that mean that the markets are going to go up? and the currency is going to fall? Textbook, yes, but does that mean it's going to do that now here? Who knows? It's context. What's already priced in? What's not priced in? How do you gauge that? What's the market's reaction function? Like, you can agonize about those things or not agonize about them. But if you're not constantly watching, if you're not looking at how the market's reaction function evolves and what you think that means, you might as well not look at the data, because there is no formula that says if CPI this, then XYZ markets that holds consistently over time. Or if the central bank does this to rates, that will happen. But that consistency doesn't exist. And of course it doesn't exist. It shouldn't exist. But because market consensus changes, things that are prioritized at a given time change. It's a liquid chessboard that we're operating with. It's not just the pieces moving, it's the board itself. But if you're not going to account for that, and if your critique of fundamental analysis or looking at this type of stuff is it isn't consistent, well, congratulations, you're right. It isn't consistent. Those of us that look at it aren't looking at it because we think it's consistent. That's not the thing that we're engaged in. But if your bar for its usefulness is it's consistent, don't look at it at all, because you're not going to get it.
The CPI report obviously extended beyond the equity market here. Bonds are a bit weaker. Dylan, I keep bringing up the reflation topic because I think of what happened last September. The Fed gave us 50 basis points of cuts. Stocks went up. Ultimately, the dollar goes up. U.S. Treasury yields go up in the wake of it. That's not to say that gold didn't continue to benefit. But here today, we get this set of data. It's in line. And I'd remind everyone, 0.2% annualized on a month-over-month basis is a 2.43% year-over-year reading. At 0.3% in the core, that's a 3.66% annualized reading. So we're not really in the Fed's target zone if we're thinking about cutting rates here, just on the top line numbers. So we're going to get rate cuts when inflation is above target. We just saw this movie last September. Are you worried about the bond market at all, Mr. Radigan, here? We have $2 trillion in new debt issuance due, plus this potential reflation coming down the pipeline. Why would we want to be long U.S. government debt if we're going to avoid a recession thanks to the largesse of the Fed's balance sheet?
Why would we what? Why would we what?
Ilya and I are long bonds because we think recession could be coming.
Right.
If we're getting cuts and we're reflating the economy,
right?
What rationale does someone have to be long bonds in the face of or ahead of $2 trillion of new net debt issuance to pay for government spending? Like, what's the bull case here?
I don't know if I can make it. I'm not sure I can make a bull case. I mean, I don't know. I mean, the issue with the bond, so the stock market is actually very easy right now just because of the overwhelming sentiment combined with the rate cuts. The bond and the dollar, for that matter, and gold and all the sort of super macro stuff that's normally in some ways easier to at least have an opinion on. I feel like, I guess I would put the question back to you, or at least sort of dodge the question and send it to Ilya and say, one, do you believe rate cuts are more likely today than they were yesterday in September? And if they are more likely today than they were in September, does that not support a long bond thesis as rates come back in? So, sort of academically, I suppose it does. Mm-hmm. But more than enough times we've seen, especially with the inflation kicking around and these other things, what's up is down and what's left is right. So I guess I would flip it over and say, why wouldn't you be long bonds? If you believe rate cuts are coming sooner, the probability of rate cuts are coming sooner than it was, which the market believes, why wouldn't you want to be long bonds?
Just from the contours of the data, it looks like we're going to see even higher inflation figures coming down the pipeline for the August reading. And then we're going to have an August print that gives you warmer inflation coupled with a Fed that then is going to cut.
See, this is what happens when you
start thinking. Yeah.
See, this is what happens. You're
Hearing a
doing it.
tremendous
You're
amount
doing
of-
it again. You're doing it again. Look at CME Fed funds futures pricing.
Well, hold on a second. Let's not think for a quick second then. If there's no thinking involved here with bonds,
right?
4.0 IVR makes this not even worthwhile. ZN.
Cheap. Super cheap.
Well, if you want to be directional, yes. But in terms of like a typical tasty vol harvesting.
Oh, there's no vol to extract here.
There's not. This is not even worth it then.
There's just nothing.
Why are we talking about it?
Here's why we're talking about it. Because directionally, the trend holds. And at the long end, there is a trend, especially in ZB. It's flatter in ZN, but it's there too. But from the lows in May, there is a slow series of higher highs and higher lows. That is not upset by the price action today. The price action today was most impactful at the front end of the curve, where the bonds went up. And they went up because Fed rate cut odds for September increased nominally from, as we said, 86 to 94 and change. So this is where thinking gets you. They get the highest core inflation in 5 months. They get the highest core goods inflation, that thing you're worried about if you're worried about tariffs, since June 2023. Service sector inflation actually cools a little bit month on month. Goods inflation goes up by a good margin for a second consecutive month. That does not in any way prevent the markets from thinking a rate cut is more likely. Why? Don't start thinking now. Don't do it. So, how that makes any sense is not what I am going to attempt to unpick. I am instead just going to say, well, they think a September rate cut is more likely. La-di-da.
So then,
They also seem to think-
so then the theory with that, if you think less, you buy bonds on the very premise.
They also seem to think Fed funds futures, the pricing, again, this is not an opinion.
Okay, not us thinking. This is the market sentiment.
This is the market's collective thinking.
Okay.
That next year we're going to get 3 cuts, whereas the Fed has only owned up to 1. So there's still more room for the markets to pull yields down at the long end. And you're not in that thing where the markets go, okay, they're going to front load everything. This is where the front end should be where the rate cuts are. And then at the back end, the thing is going to be higher because by the time you get to those maturities, by the time you're that far into the future, you're already into a new rate hike cycle after whatever's occurred. We're not there yet, obviously. And so if the market is still way more dovish than the Fed is looking out into next year, and the long end hasn't invalidated in price action that it's slow, arduous, annoying, but upward sloping trend is intact, then it's intact. Think less.
Dylan, can we change our focus here for a second? There was an interesting data point that I saw, and I want to go into a different realm here, sector-wise, perhaps an area of expertise for you. Saw a data point today showing that through the end of July, the TSA had logged record checkpoint travel numbers. When you have record checkpoint travel numbers, that's probably going to be good for some of the airline stocks, one would think. And you see today, airlines have a 7.27% boom per the JETS ETF.
Oh,
Thankfully,
in the CPI numbers, this was one of the reasons CPI is up. One of the biggest contributors was the transport component in which airlines live.
Well, and I'm looking across the board. It just seems like travel in general had a really really good day. You could go to Royal Caribbean, you could go to Airbnb. We could talk Carnival Cruise Lines. That's why I had a booking before, BKNG. Is this the surest sign, Dylan? Right, the fact that all these travel-related companies that require the conspicuous consumption of wealthy consumers to power their earnings, isn't this the prime example why we really shouldn't be so worried about the broader stock market right now?
I don't know if it's the prime example, but it's certainly a prime. I mean, I believe you are interpreting the data correctly, which is it's impossible to have this level of velocity in hotel rooms and airplane tickets and have the economy in trouble.
That's
I don't know whether it's a great idea to own the names only because of price valuation things, but for sure the internal metrics on the velocity of hotel rooms and airplanes is smoking. And there's rate leverage. You know, anybody who's booked a hotel room or an airplane ticket in the past few months is surely aware that prices are more expensive in general for pretty much everything. So it's not just that there's sort of occupancy rates or seat utilization rates are up, but the price per seat or the price per room key is also up. It is a boom.
And all of the adjacent stuff, by the way, just even anecdotally, but you can see it in the recreation price numbers in the data. But all of the adjacent stuff. I mean, I live in a major city. Chris, you're in a major city often enough. Dylan, you're in a major city that's not in the U.S. Even anecdotally, restaurants are full, cafes are full, people are out in the street. Life is there. Consumption is occurring. Now, when you look at the GDP data, it's occurring at a worryingly slow rate. And so you wonder kind of where the wall is. And I suppose we'll find out. We have retail sales and consumer confidence numbers later on this week. That's probably the biggest question of all, is can the Fed cut soon enough, and can those cuts appear in the real economy soon enough to backstop what appears to be a slow rollover in consumption? At least that's what the GDP data is telling us. But anecdotally, spending on services seems to be holding up.
It's holding up right now. I'm not sure if there's a ton of volatility in any of these stocks, and I'm not sure there's a ton of volume to substantiate anything in any of these stocks. But again, across the board, American Airlines today, boom, 12.1%. Alaska Air Group today, up 9.95%. United, up 10.2%. Forget the problems in Newark. This is one of those little things we don't even talk about the travel or airline ETFs all that much here, but in terms of where the money went as a result of today's report, it's very hard to overlook. Regional banks, home builders, travel, things that Americans do. They borrow money to spend it and buy things when they're confident. They buy new homes when they're confident. They travel on vacation when they're confident. Dylan, I can't help but think the smartest thing that was said on air recently was when we all agreed that if the Trump tax bill is cutting taxes for the top 20% and raising them for the bottom 80%, and if 90% of the stock market is owned by the top 10% of wealth in this country, aren't we just giving the people who are playing in the stock market more money to put into the stock market?
I mean, haven't I been saying that? Haven't we been doing that? I mean, that's why you confused me.
It's been a hellish 12 days being confused, Dylan.
You confused me over the last few weeks with your bizarre and un-Vecchio-like caution and thought. I mean,
I'm tortured.
I don't understand it. This is coming from the man who declared in October of 2023 to go ape shit long and just cleaned house
In the immortal words of Walter Sobchak, you're being very undued.
Yeah. Yeah. Very undued. That's right. What's the deal, Vecchio? Is it something, have you started using like soy milk or something? What's going on over there?
Oh gosh, please. Come on. No, I try to be a very thoughtful person in terms of how I look at how I trade. And the last few years, I just have not done well in the market on the long side in August or September. And the last few years, I've been able to mostly get out of the way. I mean, I did have a spite position on in the NASDAQ going to that August sell-off last year because Ilya was bothering me, but I held through it and it ultimately made money. So outside
of the sell-off, it's okay.
Right?
By the time that thing turned around, I was already out. Like a thief.
It just hasn't been a good run. And so maybe, with the NASDAQ, at least I got out of the way. I wasn't there for the pullback. I didn't buy the dip. I haven't partaken in the rally. Now it's moved up to a new high. Is it too far, too fast? No, 25K seems reasonable if we just follow the preordained path. As we've been in since May, we're kind of on autopilot here. So next dip, we get a 2% pullback. You're going to got to stay on top of it right now. Whatever candlestick clustering there, Ilya, about that evening star on the 12-hour time frame. See you later. Invalid. Goodbye.
Nope. Totally invalidated. Good night.
There's nothing here to look at.
The cleanliness of the break in NASDAQ is made more clean because you tested that high over the course of multiple days and you're kicking at it, you're kicking at it, you're kicking at it. You see the resistance work. 1 day, 2 day, 3 days. And then you get the break, which adds validity to the break.
It was eating all the supplies.
Recognized there was a barrier there. It showed you, I see the barrier. Today I see it, and now I see it, and now I see it, and today I'm punching through it. Good night. You don't see that in the S&P. You don't see that in the Russell, so I still have those on. But this one, good night. I'm gone. It ended up being a loss of less than 1% of equity, which is exactly the type of risk management that my naysaying of the stock market here requires. And by the way, the naysaying will continue.
Oh, we know. No, don't worry.
It will continue, but it will continue in a responsible, risk-mindful kind of way, whereby those things that don't work will be cut without causing more than a paper cut, and those things that work will be scaled by as much scale as they'll take.
Dylan, it's not 1 penny anymore. But how good does this look right now? Are we thinking that crypto's the canary in the coal mine for all this? Ethereum back above 4,600 an ounce for the first time in several years?
Man, if I could be short anything, I'd be short crypto. I just think the whole thing is a boondoggle.
Because you didn't buy it at a penny.
I mean,
because it's uncollateralized, there's no enterprise. It's the whole thing. I would rather own a tulip bulb. At least then I get a flower.
I totally agree.
Gosh, this thing really is going a million.
We've both been totally wrong, and that's okay. I'm okay not participating in this because if I was, it would eat a hole in my brain, wondering when is it time to finally get off the stupid pills. So I'd rather just not participate. It's fine.
Okay. I can't confirm this to be true to the audience, but if Ilya was a moderator at Buttcoin on subreddit, that wouldn't surprise me, which is the anti-Bitcoin.
I don't use Reddit.
It's the anti-Bitcoin subreddit. It's called Buttcoin.
Yeah. I don't use Reddit either because, again, if I allowed myself to engage in these conversations, I would have no time for anything ever because I would be arguing with people until the end of time.
Well, it's not something that's broken, and we don't fix non-broken things around here. A few months ago, we were outlining a bull case in Bitcoin where I at least was thinking that this could be going up towards 135K. Simple measured move, swing lows that you have in August of last year, highs in January of this, back down to the lows in April. A, B, C, 100% extension gives you a 135,000 or so price target. In the short run, this is best expressed perhaps through IBIT, which in IBIT that translates to roughly $75. It's one of the reasons why for the past several months, I've been sitting in this position. Now, whether or not we're going to get to 75 in the next 38 days is another story. But I think that we have a very clear path here, Ilya. Just forget the ticker, just pure up, sideways, up, sideways. There is a clear cadence to this market right now.
Yeah.
And the cadence is
technically this is very clean. This looks very much like the kind of pennant flag whatever thing that you just had a few weeks back, where you have a thrust higher, sideways consolidation, thrust higher. Now you're back into sideways consolidation. You don't have the risk reward yet because you're still at the top of that consolidation. You haven't actually broken out. So maybe you wait for that to happen and then reload. But ticker agnostic, just looking at the chart, appears to be a market that wants to keep going. Maybe not. Maybe you wait to sort of action that view for better risk reward, but I'm obviously not going to participate on grounds having nothing to do with the technical setup, but sort of philosophical issues aside, I think the chart looks up and to the right.
Well, I mean, one of the reasons why I like technicals in crypto, and maybe this is not just a Bitcoin thing, but I really do think this applies to crypto more generally, is that the fundamental analysis is so difficult for people to all agree on. For crypto, there's no like central touch point.
Yeah, nobody even knows what that means.
Well, I mean, I point this out because several years ago was it 2020 or 2021, I was tasked with giving a presentation to a special group of clients internally. On-chain metrics, and I have it up here, on-chain metrics, you're looking at transaction count, transaction value, active addresses, fees paid, hash rate and the amount staked, and then the staking as if you're doing proof of stake. The project metrics for some of these altcoins, you're looking at what's known as tokenomics and initial distribution, the white paper and the technology used. Okay. People generally fall back on market cap, liquidity, and volume supply mechanisms, but you just don't see any uniform set of metrics that people like to follow because, again, who really is basing a meme coin trading strategy around a white paper?
This is the whole thing. Have you ever talked to anybody that cites any of these things in actually doing anything?
Yes. And I think that like okay, can you point to me previous examples when this has led to this? Like, what's the fundamental precondition for you to believe in this indicator?
Yeah.
And sometimes it's like, well, 6 months after a Bitcoin halving, Bitcoin tends to peak for the cycle. Right. And that's something that has been fairly reliable. We haven't had a ton of halvings, but we're coming up to a 6-month window soon. So maybe Bitcoin is ending its next bull run. Maybe we get to 135, Ilya, and then we have a protracted slowdown like we've had after all the other halvings getting past their 6-month mark.
Maybe.
That's a compelling study that I should pull up here. We should put that on the blog. I digress, though. I still think if Dylan, if we're going to be running the NASDAQ hot, if we got a 25K target now, if we have an S&P that looks at 6,700 over the next few weeks, it's probably going to be bad news for gold and silver. Why on earth are you going to allocate to shiny rocks when the stuff that sings is soaring through the sky? It's probably going to be good for Bitcoin, good for Ethereum. So we're just going to keep running it hot. And if only to underscore why we're going to run it hot, Ilya, we had that trade data that came out talking about our trade balance.
Yes.
So yes, the U.S. government is indeed collecting a lot more tariff revenue. Here's the deal.
Of course it is.
The pace of government spending is actually faster. The increase in government spending is faster than the uptick in tariff intake. So our deficit is still widening out, even though we have all these tariffs in place.
Well, and also, who is the intake coming from? That's
we're robbing the Peters to pay the Pauls.
Right. We're robbing ourselves. This is just a tax. This is a tax increase. Like, you see this revenue go in, and the moment that the inside of your head says, I guess this was right, I guess this is going to pay for stuff, well, okay, so you're a believer in tax hikes. That's all. And you can be that. That's okay. But the moment you change your thinking and say this is not what this is, you're wrong. Because all that's happened is there's been a consumption tax that U.S. companies and consumers now have to pay. We'll see, by the way, in the PPI data to what extent companies are willing to continue to swallow it on behalf of consumers, because that's a big reason why the CPI numbers aren't much, much worse, because companies are eating it. So we'll see how much that continues. But the moment you think that this revenue is coming from anyone other than you, you're wrong. So, okay, I mean, yeah, there's a lot of revenue because taxes have been raised.
That's it. Well said. Dylan, I want to give you the final closing thought here today. It's hot here in New York. Probably time for a swim. Are you still going to be swimming in long? When do you get out of the long stock trade? I really wonder that's the question, because I know I'm about to jump back in with you.
The bane of my existence. I mean, that's a question. My entire history as a trader, if you want to call it that, is entirely based on not knowing when or how to get out. My marginal edge in getting in is average or above average. My experience in knowing when to get out, especially when something's working, actually it doesn't matter, working, not working. My problem is my inclination is always just to keep staying in. It's like staying at the blackjack table until all the money is gone, no matter how far up you get.
You never walk away from a heater. What was I doing?
And so certainly with this one, I mean, I feel like this could go on for the next 5 years.
Oh yeah, I think we kind of got to take a screw it trade here to, it's not going to get filled, but we're going to do it for the show sake. 35 DTE, 6,700, 6,750. That's going to give us basically a 10 to 1-er. When does this line up on the chart? August 22nd?
Mm-hmm.
Yeah. Dylan, I'm going to have to jump back on board here.
There we go. That's my boy.
Now, if tomorrow the NASDAQ breaks below its high, right, and the S&P 500 fails up here, because this is not going to get filled in the final 2 minutes of the day, so there's no point in putting it on now. But in the event that the NASDAQ is failing overnight and the S&P fails overnight, like, I'll sit on it for a second. But if we pull back into the former resistance turn support, right, if we're all of a sudden looking at a market that's hanging around 83, 23, 80, 850, we've pulled back in tomorrow overnight and then we're just sitting there. That's the retest. It's almost like one of these that we've seen in recent weeks. Mm-hmm. It sounds stupid. I've missed out. I'm missing out. Short iron condor on the S&P has not worked. See you later. Short call spread on the Russell has not worked. See you later. Been avoiding things in the NASDAQ after being long for such a period of time. But now you have a new cycle high. So what are we calling it? The Icarus strategy. In the market for 5 days, roll the position just slightly out of the money and keep spinning the wheel until it works, because vol is low, volume's low, technical drift is positive. Volatility is, of course, the foundation for everything we do here at Tasty Trade and Tasty Live, I should say, rather, on air. 14.73 in your VIX right now. Ilya, we've gone over this metric hundreds of times. Mm-hmm. If we look at the performance on daily returns, downside risk, standard deviation of returns, when VIX is 15 or below, the single best thing you can do is be long stocks. It's better than being short a strangle or short a put spread or short an iron condor. It gives you a higher daily return on average with lower standard deviation of those returns. So you know what? Maybe we just go fishing. Maybe it's time to just follow Dylan into the supernova and just go fishing. So that's what I'll be doing. Hopefully I don't get burned up again. You're going to be back though in a minute.
Wings.
Yeah, you'll be back in a minute though for macro money. You'll break down the CPI report, I presume.
I most certainly will, and then we'll look ahead to PPI, which may be the next test of this thing, because it's not just the end result that matters, it's what went into the cake, and we'll see if that changes anything. It's been a lot spicier in recent months.
Well, overtime's out of time. You can go see what Ilya's cooking on macro money next. So for Ilya Spivak, I've been Chris Vecchio. He's been Dylan Radigan. See you tomorrow, same time, same place, here on Tasty Live, right after first call. Good luck trading.
Well, the stock market got to see that inflation data it was waiting for, and it got its answer. Not surprisingly, that answer is very clearly apparent in the price action given what we saw in the numbers. NASDAQ breaking to a new high, the S&P at its high, but certainly up. So what is it that was in this data? Why was this the reaction? We're going to take it apart here, take a look at how the markets responded, but more importantly, take a look at what comes next. Because perhaps the biggest question, as ever, for anybody that's actually participating in markets is, okay, so we got what we got today, and we can have any kind of academic conversation about it that we like, but the real question is, what has this market done for us lately? Where are we going next? That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. Here's a view, first and foremost, on the day's performance to get a sense for what the price action told us this data was all about, because as ever, that is the most important of all the perspectives, and we can clearly see stock markets liked it. S&P up 1.07%, NASDAQ up 1.27%. The view on rates clearly seems to suggest that the markets read this to be generally supportive of rate cuts. We can see barely any change at the long end. In fact, a touch higher on rates there. But at the front end, the 2-year rates come in meaningfully. The 2-year down almost 0.9%. Gold basically doesn't go anywhere. Crude oil still doing its own thing, down 1.3%, but really not deviating from its recent ranges, just oscillating the past several days. The dollar, though, matching the overall mood here, a little bit weaker. Euro up 0.5%, yen up 0.2%. Bitcoin also taking a positive step here in the context of a generally risk-on day and a weaker dollar. So it seems like the markets looked at this data and said, oh, okay, this is fine. Rate cuts on. And on that basis, risk on, dollar down. So what did this data have in it that took the markets in that direction? The headline number comes in a little bit softer than expected, 2.7% versus 2.8% expected. The core reading comes in a little bit hotter, 3.1% versus 3% expected. So choose your own adventure. That's really the name of the game for this jobs report, because if you wanted to be concerned, as the Fed is, about tariff-based inflation, you got your report. But it wasn't consistent enough for the market to conclude that it will derail a September rate cut. And in fact, when we look at the pricing, we can see that the likelihood of a rate cut in September has increased today versus yesterday. Here was yesterday, We were sitting at about 86%. We've now gone up to 94%. The likelihood that we stay unchanged went down. The possibility that we might get a relatively larger rate cut fallen off the menu here. And indeed, we can see that this spook in and around the U.S. jobs data and sort of adjacent things that got us thinking that ahead of the jobs data, that Fed announcement and sort of things that revived a more hawkish perspective. We can see here we were much closer to 50-50 a month ago. Well, that is nowhere on the board here. So, in the context of whatever occurred here, the market said, yeah, this September rate cut is going to happen, and its chances have become likelier. If we look at the overall outlook for policy, it hasn't changed very much. Markets are still at about 50 basis points for this year, and they're still at about 3 rate cuts for next year. That's 2 cuts this year. Ostensibly, that's September, and then another one sometime either in October or December. That's when the meetings are. And for next year, markets are at 67 basis points, which essentially comports to at least 2 cuts. That would be 50 basis points. And most of the way to another cut after that, to a third cut, such that the likelihood of that third cut is about 68%. So better than even. Needless to say, what this does is continue to mark a dovish contrast with what the Fed's own thinking is. As we've said before, the markets and the Fed are basically on equal footing for this year. The market thinks 50 basis points. The Fed agrees. 3.9 would be down from 4.4. That's 50 basis points for this year. For next year, however, the Fed sees just 1 additional cut, and the markets are on the dovish end of that still. So the lens through which we are looking here seems still to be what the markets want is more easing. What the markets want is more rate cuts. They don't necessarily buy the Fed's argument for delay. And their thinking is all of the cutting that the Fed is not going to do this year, they're going to have to play catch up with next year. So at least that much remains unchanged. Now, what was it in this inflation data that got them thinking that this cut is coming? Well, looking at the internals, they continue to look generally supportive of a status quo. Most inflation still sitting in the service sector, but the share in goods continues to increase. In fact, at a contribution of 0.22 percentage points, this was the biggest contribution from the goods sector to overall inflation since June 2023. Moreover, the thrust of where inflation is coming from is very clearly more potent in goods than it is in services. So while services continue to be the biggest overall component of inflation, it actually diminished in terms of its contribution to the headline a little bit, whereas the contribution from goods increased. This is not to say that services didn't power the increase in inflation. It did, because it's a much bigger part of the whole. But there does appear to be some kind of a handoff here, and the kind of handoff that you would expect were you to be concerned that goods inflation is going up because we've increased sales taxes on those goods. Because lest you get confused, that is exactly what tariffs are. They are a sales tax on imported stuff. That, of course, makes the price of imported stuff go up. And so, not surprisingly, the inflationary thrust is on the goods side. Moreover, if we disaggregate CPI, we set shelter aside by itself because it is something of a separate component onto its own. Obviously, this is not as responsive to the usual sort of import-export, and certainly tariff dynamics that you might expect. So we take housing and set it aside. We look at core goods and core services, excluding housing, and obviously in that they are core, they are also excluding the price of stuff set on global markets, food, energy. Okay, what do we see? Inflation has been going up in both instances, goods, services. In goods, it is now the highest in over 2 years, going back to here, June of 2023. In services, it's also increasing. These year-on-year readings are also increasing, but this one is only the highest since December of 2024. Moreover, if we look month-on-month wise, that's the bars, not the lines, goods increasing in July, services decreasing. So if you wanted to see that goods are becoming a bigger part of inflation because of tariffs, you can see it. Tentatively, early days, but you can see it. If you look at the Fed's perspective on the level of force behind the trend, as it were, you can see what happens to these annualized readings that the Fed looks at, where it takes the 3-month reading and annualizes it, the 6-month reading and annualizes it, both headline and core, to get a sense not just at the year-on-year readings, but where the immediate thrust is. And you can see that, indeed, month-on-month, core inflation has been going up, and it's been going up since May. It went up in June, it went up again in July. That hasn't yet shown up in 6-month core, which is holding relatively steady. If you look at what's going on in 6-month headline, it's actually continuing to cool. In fact, it's been cooling since February and continues to. And if you look at the 3-month headline, it popped in June and hasn't really gone very far in July. So if nothing else, what you get here is kind of a mixed bag. The 6-month trajectory for headline still is favorable. For core, the 3-month is starting to tell you that maybe things are starting to turn in the wrong direction. But it's not convincing and it's not consistent. What you certainly don't have is a clear sort of inflationary ascent here. Instead, you have a descent into what, broadly speaking, looks like a leveling out, but not exactly a meaningful melt-up. And so with that, it looks like the markets go, okay, well, nothing has changed, but time is moving. And this is another piece of data that then will help to get us to a September rate cut, because as long as this isn't going the wrong way, the Fed is going to start running up against its calendar, and it only has but so many meetings to do 50 basis points, which it's been arguing for all year. So why wouldn't that cut occur? Especially as you get more dissents on the FOMC. Now, what then becomes interesting is whether these numbers can be taken at face value. And by no means are we saying that the data is somehow corrupt or manipulated. All that nonsense, I think, is generally irrelevant. for the most part, because you can have an academic conversation about the veracity of the numbers, but from a trading perspective, everybody just needs a single yardstick. And as long as everybody's operating from the same yardstick, that's what markets are going to do. And the yardstick hasn't changed. The quality of the data in that yardstick may have been degraded, and almost certainly is degraded, because we're using about 30% imputed values in CPI now, which is way off the charts for the historical norm. Even during COVID, it was lower than this. And when you reduce staffing at the BLS by significant amounts, when you cut BLS resources, you end up with less of an ability to get accurate data. Shock of shocks. But from a trading perspective, if the yardstick is there, that's what the markets will use, and just operate as though they will take it at face value. No, when we say whether this data is real, what we mean is the absence of greater inflationary risk from the tariffs, though, of course, as we see, it's not like it's not there. It's there. But it's not anything scary at this point. And so the question is this absence of a much stronger thrust actually reflective of the tariffs being relatively benign, or is somebody else footing the bill? And in this sense, we're going to be paying close attention later this week to PPI data, the Producer Price Index, a measure of wholesale inflation, to see if we can tease out just how much we can take the end CPI result at face value. And you can see the expectation here is higher inflation across the board. Higher for the headline from 2.3 to 2.5, higher for the core from 2.6 to 2.9. Month-on-month changes all expected to be positive, whereas, of course, in June there was standstill. And we've already started to see goods inflation creep into PPI. This is PPI final demand, and you can see that over the past several months, it's already started to arrive. In fact, in June, we had the highest wholesale goods inflation since January. So it's starting to happen. But much more importantly, at the beginning of the curve, here, what we find is that we have wholesalers eating the tariff cost. In fact, what you see here, this is note, whereas this is final demand, this is intermediate demand. And what this is the price for trade services. In this case, this is the cost of doing business at the front end of the curve. This is margins for wholesalers. And at the intermediate demand level, this is the very beginning of the US-based supply chain. So stuff arrives from wherever it arrives from. The people that receive it and begin its journey through the US supply chain, be it to the distributors downstream, which then deliver it to stores, be it to people that need whatever inputs have arrived to then make final goods. This is the very, very beginning of the supply chain and the margins there. And you can see massive margin contraction at the start of the year. In fact, the sharpest that we'd seen since going all the way back to 2013. So we're talking a 12-year reference point here. And over the subsequent months, things haven't maintained the cadence, but they've certainly maintained the direction. Margins continue to deteriorate. What this is telling us is that there's your inflation costs. They're just being eaten. They're being subsumed into margins at the beginning of the supply chain. ostensibly because firms at this level of distribution do not want to undermine demand downstream, and so they're not passing on the costs. They're eating as much of them as they can. And even then, by the way, as we can see here, this is increasing. So goods inflation going up at the wholesale level, goods inflation going up at the retail level. So it's starting to break through. But one might surmise it would be breaking through much more so if you were to have a straight pass through here rather than these companies eating the costs. What does all this mean? Well, we can see here that we started this year with a growth scare around the introduction of the Trump administration's tariff policies. We know that this happened in the context of a growth scare because if it had happened otherwise, it would have happened back in November during the election cycle, and obviously it didn't. Markets held up here. In mid-February, the S&P 500 started to go lower. Against that backdrop, not surprisingly, Fed policy expectations became more dovish, all around this idea that what you'll have is some sort of a growth scare on the back of these tariffs, and maybe even something structural. That would be this panic right here. What we've seen since then is that we've basically held on to all of the net easing that we're looking for. It's reshuffled somewhat from being mostly, oh my God, we're going to need it in 2025, to no, it's going to be mostly next year as the Fed is catching up, since they don't really want to jump the gun here. Stocks have obviously recovered because, in large part, whatever institutional and market structure risk ran out of steam as a concern here once it became clear that the administration is not, after all, immune to market discipline and will put tariffs on even a 90-day hiatus when the market gets quote-unquote yippy, to borrow from the president's terminology. Sentiment has obviously recovered, but rate cut expectations have not moved back up. So it's not like we are seeing the case for rate cuts be diminished. Sentiment is just improving. And so one might surmise that if the PPI numbers told you something whereby this had to move in and you had to diminish the case for easing, then stocks wouldn't like it. But for the moment, that isn't what we're looking at, and ostensibly, as long as this continues, stocks remain in the trend that they're in. We're just going to have to look at that PPI number and see if it gives us any rationale to think otherwise, because it can, depending on what's in it, suggest that what we just saw in CPI is smoke and mirrors. And on the flip side, there is the US dollar. And this is perhaps where things get a little bit more interesting. As the outlook has become more dovish, the dollar has weakened. But as it's anchored around these dovish levels basically since June, the dollar has stopped falling and now appears to be trying to carve out some kind of a bottom. And so, were there to be one takeaway from this current environment, it is that whatever is happening with near-term rate cut expectations, even when they get more sure of themselves, as they appear to get today, the overall outlook for policy is relatively stable, and the dollar's sell-off seems to be leveling out against that backdrop. So whatever one thinks of stocks, the dollar at least seems to be showing signs of what could amount to a trend change versus this blistering sell-off in the beginning of the year. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. On the news and insights portion of tastylive.com, putting all of this same analysis into writing rather than video. Commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is Tuesday, almost midday in the midday of the week in the market. We had a pretty aggressive sell-off today, and then got bought back up like nobody's business. But we'll get into all of that, get into some of the topics we got for today. But before we do that, Gus, my brother, how are we doing today?
Doing well, yeah. All-time highs. You know, I'm Mr. Long Delta, so anytime we're
Mr.
hitting
Long
all-time
Delta,
highs, these things tend to go well for me. Sophos, you were making me laugh and chat with your thrusting commentary earlier. We we acknowledged that pre-stream here. Very very funny stuff. But yeah, and we had it's a kind of a sleeper earnings week this week. You feel like you're done with earnings season, but there's been one call every day that has kind of, I guess I should say, there's been at least one large company having a call every day. We had Applied Materials go off, Kava and CoreWeave go off today. CoreWeave, obviously a highly discussed name right now. So yeah, it's been interesting, but it hasn't really brought much vol, and I'm here for it.
Yeah, I mean, I'm pretty bullish on Kava. Kava was one of those food spots that was like a good replacement for Chipotle. When it's like, I've been hitting Chipotle a lot. Kava, it seems like it's a little bit more polished.
I think people don't talk enough, and maybe Chipotle didn't even do it, but who invented the Chipotle model? Like where you walk along, is it Subway? Because Subway is the other one that I feel like is really early to market with that.
I think probably Subway, but who did Subway take that from? Maybe like the buffet style? I know it's not buffet style where you don't serve yourself, but in the way of where the
It's cafeteria style, yeah.
It's cafeteria style.
Yeah.
So maybe it's been around for a while.
Yeah, perhaps.
But yeah, probably
if anybody has any insights, please let me know in the chat.
I think it was Subway, though.
What?
Now that you mention it, I think it was Subway.
Have it your way, man. And now somehow
Is that Subway? No,
that
it's
was Subway.
BK.
No, because Burger King stole it. It used to always be
BK.
Subway's thing.
Have it your way.
That was always Subway's thing. Like the have it your way, $5 foot long. Like you don't remember those
I remember
commercials?
the have it your way, but like the tonality of it.
Yeah. Burger King has taken this over for sure.
Subway was like $5. I'm not even gonna get into it right now.
Well, no. But they had the Subway would say "Have it your way." That was like their thing.
Was it?
Yeah. I remember
It makes
that.
sense because it's Subway. But
I remember
didn't know
like the
it was
commercials
Subway.
that were like specifically catered towards kids on like Disney Channel and Nickelodeon and stuff. It'd always be like a kid walking along, then it'd be like a kid's voice at the end. It'd be like Subway, have it your way. That's my child voice. So I think that was passed around a little bit. Are they both same ownership group? I don't even know.
I mean, they're both really successful.
Burger King, an independent company. It feels like none of the fast food companies are.
Yeah, no, we'll shift gears there though. But no, Kava absolutely blown up over the last few years. They've been killing it with their earnings too. Started having Kava a couple years ago. It was a nice replacement for Chipotle. Then after a while, after like the fourth or fifth time, I got absolutely tired of eating Kava and didn't go back for like another year. So it's like Chipotle gets very redundant, but it's consistent. I know what to expect. I know what I'm getting every single day, every single week if I go there. But
yeah,
Kava's doing well. They're killing
Kava
it.
was certainly a popular spot in College Station, while I was in school. And we also had another place, Piata. You ever heard of Piata?
What kind of spot is that?
It was the same style, but it was Italian food. It was
Okay.
Piata Italian street food. But you like walk along and you could make a wrap or like a pasta bowl or whatever you choose to do. But I feel like that lends itself very nicely to Italian food as well.
Have it your way with Subways?
Dang, yeah. Thank you, Sophos. I appreciate the reinforcement.
How does BK get away with that?
I don't know. Did Subway never trademark it? Is that maybe it's too broad to be able to get a trademark or something?
Because there's no way. Anyways.
Yeah, I don't know. I would think it'd be common law trademarked or something, but I guess that's over a decade ago too. I don't know.
We'll see.
Maybe they bought it.
They might have. A little bit about pay-per-view though. Before we get into today, UFC or boxing, what do you prefer to watch and why?
Oh, UFC for sure. I just think that there's more to it. I mean, that's kind of always been my view, is that in UFC they do what they do in boxing and then a whole bunch more as well. And I mean, there is, I suppose some people find the wrestling aspect of UFC to be very boring, and we have a lot of current champions that are wrestlers and are lay on top of you type of guys. They just want to get you to the ground and lay on top of you the whole round. And I understand that not many people are into that. I like the technical aspect of BJJ, and yeah, I've been a big UFC fan for maybe 3 years now, I would say.
Yeah, I've been getting a little bit more into the boxing scene. I've been a little bit more of a boxer fan, but one thing those two have in common is the pay-per-views.
Yes.
These guys are mostly getting paid, or their big paydays are coming from those pay-per-views. We've seen Gervonta Davis and Ryan Garcia whenever they marketed that fight. We're seeing these fights marketed on social media left and right all day. Ryan Garcia clearly has a massive personal brand, and he came in, I forget what he was, top 3, I think, for pay-per-view sales and what they grossed after their event. But it seems like that model is changing. So what are we getting into today?
Yeah, we're going to talk about this Paramount acquisition of UFC and all the implications that go along with that. Perhaps we're seeing the start of the death of the pay-per-view model as a whole.
Yeah.
But yes, for those unaware, Paramount, which is now Paramount Skydance, announced yesterday that they acquired the streaming rights for the UFC. They're going to be abandoning the pay-per-view model. All UFC fights will be available to Paramount Plus subscribers at no additional cost. This is a major move for the UFC. It's the first time they've ever moved away from the pay-per-view model. And Paramount is paying them $7.7 billion over the next 7 years to hold these rights. So, yeah, $1.1 billion a year. But yeah.
Was this a long time coming?
I think so. And I mean, I've been saying this about the UFC for a while, and I think it extends to boxing as well. It's really tough to grow the sport with that kind of barrier to entry. If somebody wants to, get into football or baseball or any other sport, you can just watch a game. Sometimes you might need a streaming service to do it, like EPL is on Peacock right now, for instance, or that sort of thing. But holistically, you could just turn on the TV and watch it. And I mean, especially before streaming services, that's just how it was. But these two sports have always been pay-per-view forever. And I think that really stunts your growth, especially among young people. Like when I was 18 in college, I'm $80. Are you kidding me? That's like 8 meals at Taco Bell.
100%.
So yeah, there's no way I'm going to spend that just
It's funny when you're in college or when you're in school, you think about money so different. You know what I mean? We'll go ahead and jump into this first slide here and gain a little bit more context. But Paramount's knockout punch, pun intended, formed from the merger of Paramount Global and Skydance Media, secured exclusive U.S. rights to the UFC events beginning in 2026. And you can go ahead and take that third bullet point there, guys.
Yeah, let's go for it.
Sorry.
You're good. I was going over to read the chat.
All good.
It's all pay-per-view and fight night events, and this is a strategic shift towards high-value live sports content, at least in Paramount's context. For the UFC, they were just offered enough money that they're comfortable jumping off and abandoning their pay-per-view model for the time being, and I dearly hope it does not return at the end of this contract. Emmett, to your point in chat, yeah, absolutely. I respect the hell out of the BJJ. I enjoy it. I've watched UFC BJJ. I go out of my way for it, but it's just I understand how the lack of appeal to some people. But anyway, yes, as I said before, this is a gigantic move for the UFC and for Paramount.
It's huge.
Yeah, both are abandoning their conventional business models to an extent.
Just for the future of the sport. There's a lot of guys right now, 15, 16, 17, becoming professionals now in their sport and figuring out what that structure on the business end is going to look like. So, I mean, this is huge for the whole industry. Will it stick? I mean, I hope so. At the end of the day, if it's a good business model, if it's making more money and someone's happy, it'll stay.
Yeah, absolutely. And yes, to your point, Lone Sofos, no more free sports. I think that kind of sums it up. We are, everything now is behind a paywall, is behind some subscription service. And we're going to get into a little more into this, and I'll go on my soapbox later on here. But yes, it is becoming progressively more difficult to watch sports, and this is actually kind of a breath of fresh air that suddenly it has become easier to watch this sport and cheaper. I don't know the last time that has happened with any sport at all whatsoever, and it manages to work out for all parties. And I think that this is a great deal for both parties.
Let me ask you something. You think a part, I mean, maybe it plays a role, but do you think a part of the lack of viewership with boxing in UFC is more to do with the lack of access to watching the sport on a regular basis?
Oh, I think so for sure. Yeah, absolutely. I mean, I think
that plays the largest role, because I'm kind of on the other end of the spectrum a little bit. I don't want to bring too much into it, but the WNBA, for example, people have always had access to these sports. What's the difference?
How do you mean?
In the terms of, we've always had access to watch WNBA games. Viewership has always been down. Is it directly tied to the barrier of being able to watch said sport? Pretty much what I'm getting at is UFC interesting enough, or is boxing, especially boxing, is boxing interesting enough to pull a large crowd?
I think I would say yes. And I think that if nothing else, this at least gives us the opportunity to find out.
That's a great point.
Because unlike, the WNBA or any low viewership sport, like I think tennis probably has fairly low viewership, pulling something
100%.
out of
I was thinking of bowling as well. Those other sports.
Sure. Swimming, whatever.
Right.
But yeah, I think that all of these things, the market has been tried and tested, and things need to shift within the leagues or whatever it may be to increase viewership. But in terms of boxing and UFC, that's never something that we've gotten a chance to look at. But I do definitely think that viewership will increase. I mean, the UFC averages 500,000 pay-per-view buys per fight, and that's just all the people who actually fork over the money.
And go ahead.
I was just going to say that I will say without giving too many details that I have been a UFC fan for some time and have never paid for a fight. And I think that there are many others in my demographic who have access to the same resources who are doing the same thing. So we're not just talking about 500,000 per fight. I mean, this could be upwards of 1-2 million people we're talking about.
No, 100%. And I mean, if you were in college with especially a group of guys, you guys figured out how to watch every single sport that was being played, especially on every single weekend. So we understand we had our workarounds on the pay-per-view anyways. It was time to change that model.
Yeah.
There's too much of a black market already, and they need to destroy the black market. It reminds me of the verifications on Instagram, for example. They destroyed that black market.
Sure.
Right? By now making it accessible for everybody else, take down the wall. Even the playing field, now that black market is completely destroyed. And it was kind of similar for these pay-per-view streaming services, because now somebody's out of business on the black market.
Yeah, no, absolutely. I agree. And I mean, and I said to you earlier, and I'll say again now, like, I will become a Paramount Plus subscriber because of this.
No, 100%.
And I never would have been before. Unless I wanted to rewatch iCarly or something, there's no reason I ever would have gone out of my way to subscribe to Paramount Plus. I don't watch TV. I watch YouTube.
You know what's funny from a different perspective? I signed up for Paramount Plus for the first time over like the last, I think, 12 to 24 months. And it was because I wanted to watch the Champions League. If we got anybody from the UK out here, or anybody in Germany, anywhere, wherever you might be, you notice that a lot of these games are now signing new deals with things like Paramount. Peacock is another one, but we're going to actually jump into that topic on the next slide.
Yeah, absolutely. And Emmett, to your point, it is a niche sport. 1 million views is kind of nothing in the broader scheme of sports, but also, is it niche because it's been behind the paywall, or was it behind the paywall because it was niche?
I think both play a role. I mean, we will never be able to really... The question is, how much of a role did each of those variables play into it?
Absolutely. It's tough. It's a tough relationship to. Yeah, and we're about to.
Yeah.
I mean, once they get it on Paramount, we're gonna see what's going on. Big deal. Happy to see you. Other streaming services. So the push for paid subscription streaming services into the market for sports is nothing new. Amazon Prime secured NFL, what is it? Thursday Night Football, straight up. I was going to say Thanksgiving Day games, but Thursday Night Football straight up from 2022 to 2033. So we'll be watching Thursday Night Football on Amazon Prime from here on out. Excellent deal for Amazon Prime, I might add. If I was going to target any of them, I think I would target Thursday Night Football. It always opens the week. It's a nice midweek thing. You get good viewership. And then, yes, obviously ESPN. They've bundled with Fox now. $39.99 a month offering launching in October, which I think is also probably going to wind up being a pretty profitable move for them. And they've locked in a $1.6 billion 5-year deal starting in 2026 with the WWE to stream events like WrestleMania and SummerSlam. You ever been into WWE? I haven't.
No, I got into WWE. I went to go visit my family down in Texas a long time ago. They were watching it, and I was hooked for the week. We left after that week and never watched it again. But the time I did, I mean, I was hooked. My cousins were watching. I was like, I thought it was real. I was arguing the fact that it was real.
It's interesting because I've never done anything to keep up with WWE, but it's like kind of become so merged with like the cultural zeitgeist or whatever that I just somehow know lots and lots of WWE fighters. I mean, I could name like 10 plus fighters probably.
Yeah.
Wrestlers.
What's funny with the WWE fights, have you heard of Banana Baseball? Anybody else hear Banana Baseball that's blowing up?
Yeah, the Savannah Bananas.
They're killing it, right?
Yeah.
WWE reminds me of that. The Harlem Globetrotters. It's almost like an entertainment / acting / business, but mixing it into the sport. Baseball's finally doing it. WWE was the first one around to that kind of shtick.
Yeah, it's true. And yeah, they've been doing it for forever. It feels like, since before we were born.
They've mastered the craft too, it looks like.
Absolutely. But then anyway, yes, Netflix also, Women's World Cup for 2027 and 2031. And additionally, they have a contract with the NFL to stream NFL Christmas Day games through, I believe, 2028. So, yeah, this is becoming increasingly more common, and I don't like it. I mean, it's just it just creates.
It's annoying.
It is annoying, and I think it would be fine if leagues would commit, like how I said with the EPL and Peacock. Like, I think that that's fine. But when the NFL wants to sell their Christmas games to Netflix and their Thursday Night Football to Amazon, it starts to get to be too much. And I feel like at a point it has to hurt the growth of your sport.
Completely agree. I mean, you have to draw the fine line. It's like, where are we going to start sacrificing quality, sacrificing where we're sending our viewers for some extra dollars? It's like, when does it come to a point where we start sacrificing a little bit of this for a little bit more of this? And I feel, in my opinion, by outsourcing to all these different types of streaming services, you don't make it easier on the viewer.
Yeah, absolutely. And not even to mention that also all of these leagues offer their own subscriptions that you can get your NFL Sunday ticket, your MLB, I don't even know what it's called, MLB subscription for the year, NBA League Pass, all these things, and then you can't watch any of the games on. Yeah, which that's always been crazy to me. Like, NBA League Pass, one of the most worthless subscriptions that there is, straight up. I mean, like, on a night with a slate of 10 games, you get 2 of them, and it's never. And then you have the stupid local blackouts. That's what frustrates me about MLB TV, is that you get pretty much all the games. They block you if there's an Apple TV game or anything nationally televised, but you get pretty much all the games. But you can't watch the team in your own city. You can't, like when I was living in Houston, you can't watch Astros games. I've never had problems watching the Reds, my team, because I've never lived in the same city since we've had the subscription. But yeah, if you're gonna offer a subscription, proprietary, the sport, you should be able to watch all the games.
100%.
And you can't. It's just mind-boggling to me.
Again, it's the money.
Absolutely, yeah. And there's obviously projections for all this, but this soapbox leads us into our third slide.
Some future implications. Last week we spoke a little bit about AI and the future implications. Let's talk about the implications for this new potential model. Well, we got bidding wars. I know a lot of the times bidding wars pretty much starts whenever we have any type of new model of some sort. Sports first strategy to boost subscriber growth. We got more bundles and hybrid pricing models emerging, which things are always going to get a little bit more competitive. People are going to get creative, produce new models, whatever the case might be. That's expected. Fragmented viewing may frustrate fans. Wow, it's almost like our whole gripe about this in the last 5-10 minutes, or mine at least, was about the frustration on fragmented viewing. I mean, I know sometimes I'll go on Google for some games just so I could see where they're streaming it.
Yes.
I'm like, okay, these 4 have it. And it's like, I've never had to, we're going back. Things are getting a little bit less convenient. As a kid growing up, I just had to literally click watch the game. There's a little bit more friction now. Lastly, we have global expansion through international sports rights. And I mean, we're just going to continue to see a little bit more of that, especially if this, and to the point made in chat, I mean, Dana got the deal, right, to make. Others are going to be watching too to see how it pans out, to see if that's a structure they should, take, if it's a new approach they want to try out. But I digress. And with that being said, I think fragmented viewing is going to be the most frustrating, as it already is right now.
Yes, that was also the point that I was going to draw attention to. And the funniest part about all of this is that the viewing is so fragmented, and especially with the NFL, you got to chase games all over the place, figure out where they're on and how to watch them. But if you go to these third-party sources that are, streaming the games, you don't have to do any of that searching. Right. You just click on the 2 teams that are playing and click watch. So, yes, I just feel like as this happens, these people just continue to give further legs up to the piracy sites, and that we may actually see a gradual, decline in ratings. And it's not that viewership has gone anywhere. It's just that so many people are being outsourced. I mean, I remember during the playoffs, I saw a picture of LeBron James watching a game on Stream East. Like, are you kidding me?
Yeah.
Because he don't want to do it either. You don't want to figure out where he's got to watch these games and everything, and they make it so easy. So, yeah, it's just like when you have...
The thing is, they know this is an issue.
Oh, yeah, for sure. For sure, yes. I mean, you have to. It's impossible to be unaware of, and these sites get shut down all the time, and then a new one just pops up and takes over the traffic. Yeah. But
in terms of the fragmented viewership, right? It's like they probably understand. They probably understand this is an issue right now. And my kind of thing is it more so one of those things is you as a CEO, whoever's leading these pushes, recognize other CEOs are also probably frustrated and recognize the issue at hand. Is it one of those things of like, yo, who's going to act first?
Yeah.
Who's going to provide the solution for all of us because we all see where this is going? I wonder if it's just kind of a game of chicken when it decides to change the industry, because you guys all know each other. So when are we going to see change with this fragmented viewership? Because it's such a small detail, but it is so frustrating.
I agree. I mean, I've been shouting for years, and this is not something I ever root for in any other industry, but somebody monopolizes monopolize this. Please. Somebody create a monopoly on this. I mean, I would pay $250 a month if I was just able to be guaranteed to watch everything all the time at the highest quality, maybe more.
Yeah.
But because I think it costs more than that now if you wanted to get all of these different services going and be able to actually watch everything. Somebody monopolize this. Disney, buy the NFL or something. I mean, what do we got to do here? I don't know.
Yeah. No, I mean, we'll see what we get. I don't watch too much. I don't even watch too much TV as much anymore. If I ever turn on the TV, I ever turn on cable, it's because of news or I accidentally turned it to that channel.
Oh yeah, never. I mean, I don't have cable, and I never I have Hulu with live TV, which is how I get most things, and I do think that that's the best offering in the market right now in terms of holistic live television and live sports. But
you remember when cable had on demand? I remember Comcast. After a few years in, they started to have an on-demand button on the remotes they started producing. And I was like, this on-demand feature is really cool. You just go on, choose whatever you want to watch, and watch it on demand. And on-demand ended up being the streaming services. But I remember just looking back, that was the first go-around in testing the proof of concept, watching whatever you want to watch when you want to watch it.
Yeah, absolutely. And then, and then Netflix evolves into what it is now, and yeah, it's just we are far from where we used to be with cable, where it was just, is the game on CBS? Okay, cool. I'll turn on CBS and watch it. It's just there's so many more steps now. It's gotten out of hand.
No, most definitely. Looking forward to these next seasons. We got a lot of preseason games going on out here. Shador and the Browns. They had a pretty solid preseason game the other day too. So I'm always going for the young dogs. So I'm excited for Travis Hunter, them down in Jacksonville. I hope they kill it. I hope I know what streaming service to watch them on this season. But I'm looking forward to that.
Yeah, no kidding. Yes, I'm very excited for football as well. I think the first few weeks of college football is some of the happiest times of the year for me, I would say. Used to be able to do that. It was called cable TV. Yes, precisely.
It's just full circle again, because you mentioned the idea. I would be if they just put this in a bundle, I'm paying more, and it's people think of those models already. I can create a bundle to where it's cheaper for everybody, and it's just funny because I feel like bundles is a solution to a problem. It's not we're providing this cool thing. It's if we're looking at bundles, it's because there's an issue right now, or there's a problem right now that we're trying to address. So
yeah, I see a shout out to TiVo in chat. I do remember TiVo.
TiVo, refresh my memory.
It was just where you could record something that was on live and then watch it later. Most people, everybody started calling it something different, but TiVo was the original name where you could say, I want to record tonight's episode of The Office, and then it would do it.
My dad was, I don't even know if he's watching, but my dad was such a proponent of recording stuff all the time. I never minded, right?
You record over one of those things one time, though, and
what's that?
I said suddenly you record something else or fill up the space or whatever.
No, quite literally. I know, literally, it's all filled up. But no, I remember. So growing up, soccer was like a religion with my family. My dad's from Jamaica. If you guys don't know, he's from Jamaica. Playing soccer was like a religion. Went to college to play soccer. But growing up, I remember I'd asked to go do something. He was like, "Did you watch a soccer game yet? Or did you go in the backyard and practice?" Before I would ask to do something. But anyways, long story short, we got into the habit of just recording every sports game. I hate watching recorded sports.
I do too.
Dad, I know what happened. I already know who won the game. So
got to do live sports. The only time recorded sports work is if I'm going to I know I'm going to be getting home an hour after the game starts or something, and I'm able to watch it and slowly catch up and kind of put my phone away. I will do that from time to time, and it's still live enough. Mm-hmm. But yeah, to me, sports lose all their appeal as soon as it's not live anymore.
Look, all I'm saying is, and my brother can attest to this. One time we were running late, and my dad wanted to record the Super Bowl. I said, "Dad, this is the one thing we can't record. I promise I'm going to know the results. I'm going to know who it is." He's like, "Just don't go on your phone." I was like, "I promise I'm going to know who won the results. Let's not record the Super Bowl." But I love my dad.
Something I recently learned that I think is interesting is that companies have yearly bidding wars to get their buttons on the smart TV remotes. I didn't know that was a thing.
You know, that's so funny. It's like selling sponsorship space.
It is.
And it's limited.
You literally are. And you give them the quick access buttons. And I'll tell you what, I accidentally press the HBO button on my TV all the time. And I don't even have HBO. And then it's this annoying 10-second thing where I got to wait for it to boot so I can go back home. But yeah, people pay a lot of money to have one of those hot buttons on their remotes. I think that's an interesting thing. Sleepy Mocha, everyone wanted a la carte, and this is what we got. I was kind of one of those everyone's, and I will be the first to admit that I was wrong in the state that we're in now. But also, it's not really a la carte. When I have to have Amazon Prime and Netflix and Sunday Ticket and something else to be able to watch every NFL game in a season, that ain't a la carte. I wish I could just pay for the NFL and watch the NFL, but they don't make it that simple, and nobody does. And yeah, now MLB's got the Apple TV games. You got to have Apple TV to be able to watch those, and their commentators are horrible on Apple TV. The broadcast is good though. Try making a decoder box from Radio Shack.
Remember seeing Muhammad Ali fight on that service?
Had no idea about the buttons. Yeah, Sophos, big thing.
I mean, I'm so extremely curious to what they're selling their businesses on the buttons for.
I'm curious too, and I wonder how it even works. I mean, I guess you just get it for like that make and model of
and then
like
also
Roku TV or whatever.
What is their collaboration? What is their contract? Because I mean, that's a pretty big deal if they want to remove or switch companies that's sponsoring their remote, because you're manufacturing your hardware with their brand on it, which is completely different from a digital sponsorship. So I'm kind of curious of the logistics on that point now that you bring it up.
Well, yeah, I've always noticed throughout my life as well that it's just those buttons are like so random. Like every time you get a new TV, it's just like 4 really random services. Like I actually still have
just 4 random services.
Yeah, I have an old smart TV that I don't have hung up anymore. It's just in my closet. But that remote has a button for Stars, like Stars with a Z, which was like a service that came and went in like 2 years or whatever. But yeah, I guess they were doing their big marketing push right when that TV came.
Is Stars not related to HBO?
I don't know. I have no idea.
I don't know.
I don't know.
We'll see how we wrap. Anything else to add before we hop on out of here?
Need Palantir to go down tomorrow.
Palantir to go down tomorrow.
Yes.
We will see what happens. United Airline absolutely popped off today. We still got some time on those contracts.
Yeah, airline sector as a whole, big move up. CPI data said airline prices were up.
I mean, especially after United Airlines had all that news and their bad earnings, I think a few weeks ago, to see them recover like that. Anyways, we'll see how the market opens up in the morning. Thanks for taking the time to hang out with us today. We will be back on Thursday with Gus and E for Risk of the Word at 4:30 Central Time. Be sure to stay tuned with more segments coming on next, and we will catch you guys next time. Peace.
CPI comes in on the screws and non-farm payrolls may be canceled. It's Tuesday, August 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, taking you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. What a day it was for U.S. equity markets. S&P 500 clocking a move up to a new all-time high, right around 6470. The NASDAQ breaks through 23,900 here. CPI comes in right on the nose, 0.2% month over month for the headline and 0.3% for the core. While there's evidence of tariff-induced inflation, it's not running away, and quite frankly, weakness in other areas is paving a path for a September cut, possibly. Well, that's if you ignore the Fed speakers this afternoon who said that they're still not convinced a September cut is possible. I digress, though. Looks like we're back in reflation territory, gentlemen. Economy's still holding up. We're going to get rate cuts. Bonds break down today. We have dollar getting hit hard, as was pretty similar actually to what happened in September last year after the Fed cut. Dollar doesn't really begin its climb until October. I digress though, Dylan. You deserve the floor. We've been talking and thinking far too much around here, my friend, and you have not.
I mean, I almost feel like I hesitate to speak because words tend to become correlated with thought. And if I speak too much, I'll get accused of thinking.
Should we sit here in silence for the next 55 minutes?
Quietly sit here without any thoughts in our head and just enjoy all the money we're making. No, I mean, listen. The problem with thinking, as we've discussed at great length, is that it leads to rational analysis of a potentially weakening economy, a potentially slowing economy, all these potential liabilities that ultimately are overwhelmed by basically trader investor sentiment. And I think you said it kind of perfectly there just a few seconds ago. The combination of sort of the overwhelming optimism on the artificial intelligence side, combined with the optimism for the rate cuts, put us in a tough place to be short as a worldview, even though as I've said, I feel like I could make of great case for being short, but I feel like that's why I kind of make my joke about thinking, because once you're short, you're kind of nowhere because you're up against this sentiment issue, which is the real problem that we have right now.
It's a sentiment issue, but everyone's already long, right? I mean, we discussed this earlier today, and let me explain, but UBS just put out their new report. CTA exposure to US equities is in the 100th percentile now. Never been more long. Everyone's fully invested, and yet it doesn't stop the market going up today. I can't help but see that we have thus far maintained the rally that's been in place, the channel, Dylan, that we were watching last week and the week before. It carried us here since the US-China trade war detente over in Geneva, Switzerland back in mid-May. I'm just looking at this. This is just very simplistic. We have a range. What's the size of the range? If we break out, add it to the top. If you break down, subtract it from the bottom. We could hit 6,700 here by the 3rd or 4th week of August. And that would not be obtuse given how the path of travel has been